yes, we're avoiding an imminent recession, but we've got to look at what potential growth is going forward.
You've got that strong dollar, you've got a Fed tightening, and you've also got a global economic slowdown.
We think we will indeed see that slowdown. We don't think it's going to be all that far away.
The economy is going to slow, but it's not going to slow so much that you're just going to see demand fall off a cliff.
I'm definitely not in the soft landing camp. I think we pushed too far.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Thrilled you're with us on a Tuesday before an important and historic inflation report. You need to stay with us. Our opening guest this morning says, everyone calm down. Lisa Abramowicz, calm down.
Thank you, Tom. I appreciate that. I'm absolutely freaking out. Now I feel just fine. This has been the issue. This is the conundrum, especially as we get earnings from companies that are absolutely better than expected with a lot of momentum in certain sectors and consumers still spending. How does the Fed get ahead of this, or do we see the cooling off more rapidly than so many people are thinking? And that is the bifurcation right now with the bulls and the bears on the street.
And it's important. Kaylee Lyons in for Jonathan Ferro. I thought he was back from Naples. He was delayed at NAP, and I guess he's not back again, but we'll try to get him in here tomorrow for the inflation report.
No, he's not
coming back, Tom.
Well, I know he told me that.
You have me till Friday.
He told me that actually over breakfast a couple days ago. Tom, I'm never coming back. Kaylee Lyons, good morning to you. Thank you for joining us throughout the show this morning. Kaylee, to me, it's the partition. As David Rosenberg, the giant of Toronto, would say, there's the many different parts of inflation that matter.
Yeah, there is. And we'll, of course, get a read through into those different components yesterday. How much does the headline come down because of lower food and gas prices, and how much does core and everything else prove to be a bit stickier? I just noticed Nfib data crossing the terminal just now, Tom. The percent of business owners that reported inflation was their single most important problem. 37%. That is the highest since the fourth quarter of 1979.
That's good data from Bill Dunkelberg, and again shows the spirit of small business, but the separation there from big business. And, you know, Lisa, I don't know what to make of this, and that some companies seem to be getting by. And this morning, Kaylee talking about Micron and others really having a tough time of it.
So this has been really interesting. It is
Nvidia yesterday.
Right, exactly. But how much is this because they really catered to the electronic devices that I know that even VetBill has at home, Tom? Yeah. All of these iPhones or other potential devices that people bought during the pandemic, PCs, personal computers, how much has that fallen off a cliff? But the chips for other things are in demand. How much is it a product composition issue as much as it is a demand issue? And that's what we saw at Walmart. That's what we saw at Target. How do you get ahead of a group think in terms of surging demand in certain areas and then falling off a cliff in the pandemic psychosis that we're all living in?
And there's a lot of groupthink out there. Let's go to the data right now. Lisa, help me with this. The 2-10 spread, negative 44 basis points, is really the headlining idea today. Neil Dudd is going to talk about that later.
Yeah, and it's really, there's a important way to put it, because yesterday we saw
you okay?
futures.
Did you fall off your chair?
I did. I fell off my chair because it was just such a shocking 44 basis point inversion that I didn't know what to do with myself.
Okay?
Yeah, I'm good. I'm good. I mean, I'm not on a plane to Capri, but I'm good. Honestly, we have seen S&P futures and frankly NASDAQ really bouncing around nowheresville today. But yesterday was so interesting. We had that momentum coming in, and then it all fizzled on the heels of Nvidia. People are looking for tea leaves, and it really raises questions about how much liquidity there is in this August when so many people are on planes to Capri. Here's what I'm watching today in the day ahead. 8:30 a.m. we get U.S. non-farm pay productivity. This will be really interesting because this is probably going to decline given the fact that you're getting people who are getting paid more and producing less. This is the stagflation that we're in. This is not good for the Fed. And this is something that I think is going to be really interesting.
I'm so glad you brought this up, folks. Productivity is a very complex and very dynamic move. And Lisa, you're absolutely right that it's what the pros are watching. And they're saying productivity is dampened. We are not as efficient as we should be because of this killer inflation.
And what happens as a result is eventually job freezes and layoffs. This is the portending of a downturn in the labor market, which is important to watch. Then, of course, tomorrow we get CPI, then PPI on Thursday and Friday, University of Michigan consumer sentiment. Today, also, President Biden is signing the CHIPS and Science Act of 2022 into effect. It'll be fascinating to see some of the commentary out of that, including Micron Micron CEO Sanjay Mehrotra, who's going to be joining us on Bloomberg Television at 9:30 a.m., talking about how much this could support the U.S. chip manufacturing industry and how quickly it can get ramped up, Tom, especially given the reshoring and onshoring of a lot of different manufacturers, especially in the wake of some of the disruptions. And just to give you a sense, today is also the tail end of earnings seasons with Norwegian Cruise Lines, Wynn Resorts, and Roblox, among others. Almost 90% of the S&P has reported so far. It has been largely beats. The bar is very low. Norwegian Cruise Lines have had some eviscerating recommendations, or lack thereof, from Wall Street. Those shares down nearly 35% year to date. Wynn down 23%. Roblox down 53%. Tom, as we get a lot of our kids going back to real life.
The data screen this morning, folks, as we go to Tony Roth here, is really pretty, just sort of churning along here, waiting for the inflation report. I should say red and green on the screen with a VIX 21.56. Tony Roth is a chief investment officer at Wilmington Trust. This is a cautious firm, a venerable history, and they care very much about thinking about out 3 years. Tony Roth, when you look out 3 years, you say, calm down about inflation.
Well, Tom, that's right. And even if we look out, frankly, 3 days, we think that this inflation report may represent an important pivot in this trajectory on inflation. And specifically, what we're focused on is core inflation in this report coming up on Wednesday morning. We all know that the headline number is going to come down. In fact, the consensus is, I think, down from 0.7 to 0.2. We think it's going to be flat at 0.0. That's not where the action is going to be. The action is going to be on the core number. Because when we look at a number of things, our work is showing that there's been a significant moderation in prices over the past month. So, for example, we look at core goods. We look at, for example, apparel, used cars. We look on the services side, airfare. There's a lot of evidence that prices have stabilized. Consumer inflation expectations are dropping. And when we talk to employment agencies, they're telling us that wage growth has slowed significantly. So when you put all that together,
right,
it suggests that we are at an important inflection point in the inflation story. Now, there are things that we can't control. We can't control the supply side as it relates to China, as it relates to energy with the situation in Eastern Europe and in the war. But those two areas are not important contributors at the moment. The other thing I want to mention, Tom, going out a little bit further, is that the base effects are very favorable starting in October for the next 5 months. So go ahead.
Well, no, but Tony, all of this picture that you're painting is the bull argument. It's that you've got great earnings, or good earnings, better than the worst earnings certainly expected. And you also have a cooling off inflation, which gives people conviction to go all in to risk assets. Is that your view here?
That's our base case, but it's not a high conviction view, because it's a very messy situation, quite frankly. There are a lot of things that can go wrong with that view. For example, we could have a spike in the price of energy and crude at any moment as a result of the perceptions around the war. If we have a bad winter in Europe and the recession in Europe is deeper than expected, that could infect the U.S. So there are a lot of things that can go wrong in this particular scenario, and it's a paradigm without precedent. We've never had inflation like this in modern times that needs to be walked back. And as you said earlier, there are so many dynamics in the post-pandemic equilibrium that we're trying to reset that we could see different cycles out of services back into goods, et cetera, that make the situation very, very muddy. So that is our base case scenario. The one thing that we do have conviction in right now is growth over value. There's a lot of convexity in that trade right now, because if we're wrong and we do go into a recession, value is going to underperform. On the other hand, if we're right, and it is a bull case, we expect significant recovery in those big tech names.
Tony, if we could just focus on the earnings, because essentially what you're saying is that inflation is going to come down. Therefore, those higher input costs that businesses are facing are going to come down as well. Are you not in the camp that thinks the real downgrade to profit expectations, the erosion of margins, is coming in the latter half of this year? You think margin expansion can continue?
Well, we do think that margin expansion can continue from these levels, but not with overall, not with a significant acceleration. So, for example, when you look at Q2 earnings, what you see is that overall revenue was up 12.5%. Earnings are up 7%. But if you take out energy, actual earnings for the S&P is down 4% in the second quarter. So there are certain anomalies, if you will, that are going on within the overall complex of the S&P. And so when we look going forward over the rest of the year, we really have to focus on the broader S&P ex energy. And when you do that, I think that the picture is a little bit less rosy. And so we're not quite as optimistic around margins going forward for that reason.
Tony, I think very quickly here, I need to get to the end of the year. Are you holding a lot of cash? Are you gung-ho growth quality, as we're hearing from so many guests? What's the theme to get to 12/31/22?
Both of those things, Tom. We are overweight cash, and we're also overweight growth and quality in our portfolios. And if we're right about the inflation story, what we would expect to happen is a gradual reacceleration of equity prices. Doesn't mean that margins have to do better than they are now. And in fact, when you look at the pricing power that companies have had, it's been pretty remarkable. You're seeing prices and revenues increase when unit volumes are dropping across the entire economy. And so, again, back to that margin question, margins have done so well, they don't need to continue to do that well going forward if volumes can pick back up. And again, we love that convexity that we see in the growth trade right now.
Really good. We're going to come back and catch up on convexity here into September to see where we are. Tony Roth of Wilmington Trust. What a great way to start the show this morning. Lisa, we've got much more coming up, and including an important conversation with our Joe Matthew on events in Florida.
Yeah, there's the search that went over with respect to Mar-a-Lago and how much that's got a blowback effect on the upcoming midterm elections.
For our international audience, we'll touch on that. A shock to the entire nation. Coming up at 7 a.m. again on the equity markets. Thrilled to bring you Anna Hans. Stay with us. Futures red and green on the screen. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A stunning development involving former President Trump. Federal agents searched his residence at Mar-a-Lago in Florida as part of an investigation into whether he took classified documents from the White House when he left office. The former president said in a statement that FBI agents broke into his safe. He says he's being targeted to derail a potential run for the White House in 2024. Taiwan's accusing China of using the visit of House Speaker Nancy Pelosi as a pretext to hold war games in the region. Foreign Minister Joseph Wu says Taiwan is concerned that China will invade. He called the Chinese military maneuvers a violation of international law. Meanwhile, Taiwan responded to the Chinese drills by holding its own live fire exercises. They took place on Taiwan's southeastern coast. The U.S. has announced another aid package for Ukraine. There will be $4.5 billion in additional direct aid and $1 billion more in military aid drawn from existing Pentagon inventory. The military package includes artillery ammunition, anti-tank weapons, and medical vehicles and supplies. Semiconductor giant Micron Technology plans to invest $40 billion through the end of the decade to build memory manufacturing in the U.S. The company says the investment will create up to 40,000 jobs. Micron will join the list of those seeking government subsidies from a new law that President Biden will sign today. Bloomberg's learned that Carlyle Group's billionaire founders reached a breaking point with CEO Koo-sung Lee. The result, the private equity giant announced late Sunday that Lee was stepping down. Some members of the board had grown concerned Lee was eroding the firm's values. That included founders William Conway, Daniel Dinello, and David Rubenstein. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
What the data is showing us in the U.S. is that we're not seeing enough of a slowdown yet for the Fed yet to call the quits. So the Fed, as they've signaled, they're going to keep raising interest rates. We now think 50 in September, another 50 in November, and then 25 in December before they're finished.
Mark Cabana with a sharp interview yesterday on the state of interest rates, the caution that Bank of America has on equities and fixed income as well. We welcome all of you to Bloomberg Surveillance Worldwide on radio and television. Kayla Lyons in for John Ferro, Lisa Abramowicz, and Tom Keene with red and green on the screen. And we're really focused on an inflation report tomorrow. For our international audience, it is without exaggeration that America is focused this morning on events in Florida last evening. Our Joe Matthew joins us here, of course, this wonderful sound on, which can have only one topic this morning. Joe, I want to go to Ian Millhiser at Vox, who I think did a quick and immediate summary of the judiciary of America. And what Ian really emphasizes is that the Justice Department has a process to do a search warrant, and if anyone's involved political, as clearly the former president is, this is a process that goes from Holder on to Barr and now on to Garland. There is a history here of what DOJ does. Discuss that.
Well, look, there is a process here, and that's why, we're being careful how we want to characterize this. This was a search warrant, right, approved by a federal judge with a very specific thing that they are looking for. We just don't know this morning, Tom, what that is, and it brings us back to January, if not earlier, remembering that the National Archives took back 15 boxes of documents early this year that included materials that the president should not have taken from the White House when he left. They obviously didn't find everything that they were looking for. Some of that stuff included reportedly the love letters with Kim Jong-un, some gifts and so forth, and that's not uncommon. I want to make clear to people that violations of the Presidential Records Act has happened to administrations throughout time. The Clintons had to give back $28,000 worth of furnishings that were originally classified as gifts, the property of the White House. So, look, some are calling this a raid. There were no battering rams. The Secret Service also facilitated this search. The president was not there when it happened. Nobody was taken into custody. The former president, he was in New York, a couple blocks away from you, Tom. So, it's going to take a minute here to understand exactly what happened. But the Department of Justice now being called out by Republicans. Kevin McCarthy is already planning a committee to investigate this. Will have to tell us soon what they were looking for 100 days out from the midterms.
Joe, just to make sure that I understand this correctly, the way that you're characterizing it suggests that perhaps this is a pretty routine kind of exercise for presidents that have left the office, and it was not necessarily anything that out of the ordinary, but is being painted as such in a certain way. Is that correct?
I don't want to go too far with that. We've never seen anything on this scale. It is unprecedented to see a search warrant conducted at the home of a sitting or former president. This is all new.
Joe,
Tom
what's
is
so
right.
important
This is
here,
historic.
Joe, this goes back to Adam Clayton Powell 30 years ago in my youth when I didn't have gray hair. The level of unprecedented is extraordinary. Do you?
Absolutely.
Is your reporting that the DOJ has to come out and state the why at the earliest moment? What's that timeline?
We don't know. There's a legal side to this and there's a political side to this. With regard to politics, I do think that Merrick Garland will be compelled to say specifically what they were looking for. There were protesters outside of Mar-a-Lago last night. They're probably going to be there back today. I'm sure you'll see them in front of Trump Tower. People will demand answers. Kevin McCarthy tweets, Merrick Garland, clear your schedule. We're bringing you in for an investigation. There's going to be massive fallout here. You can't put this one back in the bottle. It's very unclear to see where it's going to go, but the DOJ is going to have to close the deal on this. Otherwise, they bit off a lot more than they can chew, and the repercussions could be severe. Trump supporters called January 6th the Fedsurrection. Marjorie Taylor Greene is calling now to defund the FBI. You're going to see calls like this repeatedly between now and November unless they can make the case for what they were doing.
Yeah, and even the language the president himself used when he put out a statement on these events last night. My home is currently under siege, raided, occupied by a large group of FBI agents. Clearly language intended to galvanize his base. So, Joe, when we talk about the potential implications for 2024, does this actually help him more than it hurts him?
Well, it could. We'll see how this ends. Listen, is there crossover here with the January 6th investigation the DOJ is currently pursuing? We just don't know. If this is a classic Donald Trump and there's nothing to see here, he will raise millions of dollars on this. And you will see, if Republicans take the majority in the House, likely a massive crackdown, a January 6th committee style committee that's investigating what happened at Mar-a-Lago.
On the flip side, Joe, just to give some context, we have seen the Democrats gain some ground with the recent polls highlighting a better than good chance that they're going to retain the Senate. How much conviction do you have in those polls on the heels of some of the legislation passed as well as gas prices coming down?
Great questions. Look, I think most political watchers here in Washington have given up the House. That remains the case. There is a big question whether Republicans can take the Senate, and it has to do with quality of candidates. When you look at some of the concerns that even Republican voters have with some of the Trump-backed nominees like Herschel Walker in Georgia, these are seats that could have been easily flipped that may not be now because of the Trump-endorsed candidates. It's very difficult to tell at this stage. The president today is going to try to make a case for the CHIP Act and some of the progress they've made. But, Tom, you've already pointed out there's one thing we're talking about today.
There's only one thing here, Joe. I mean, the level, this is like beyond Watergate, quite frankly. And the distinction here of a search warrant versus what happened at Watergate has to be kept separate. Joe Matthews, should we expect a statement from the Attorney General? Most Attorney Generals can't get away from the mic.
Well, this is true, and Merrick Garland's a little bit different like that. Look, I don't know. The White House says it wasn't tipped off on this, and it's very difficult to tell what's going on in Merrick Garland's head. Is there going to be another warrant at Trump Tower? It's very difficult to tell. What did they have in that safe? We don't know. Was it one document, or is this something that might, in fact, involve more communications, be involved with January 6th? There are too many questions to really have a good sense of what they were there for.
Joe Matthews, thank you so much in the heat of this moment for the nation. Of course, sound on Bloomberg Radio tonight. Lisa, just absolutely extraordinary. I really can't think of any other moment like this in history.
I got to say, the soup of uncertainty around this makes me very cautious to even talk about it with too much detail. We haven't heard from the Department of Justice. We've heard pretty loaded political rhetoric on all sides. And right now, this is the hot button issue that distracts from the main issues that are facing the country economically and internationally, especially with the news overnight about Taiwan and some of the exercises in Washington preparing for that.
And we'll have to see. Most interesting. Red and green on the screen here. The VIX at churn 21.79. In the yield space, all you need to know is 2's 10 stays sustained inverted. A stunning negative 44 basis points. 10-year yield 2.79%. Again, we've got good conversations coming up on the Federal Reserve and this inflation report tomorrow. This is Bloomberg. Good morning. Stay with us. Bloomberg Surveillance, we welcome all of you this morning. Katie Lyons in for John Ferro, Lisa Abramowicz, and Tom Keene. A huge news flow this morning, getting ready for the inflation report. Lisa, we haven't talked about the dollar yet. It's in a delightful churn here. And I would note yen 134.84, a stronger yen over the last week is of note.
Yeah, you've seen a weakening in the dollar against the euro as well. And how much is this just sort of the optimism that perhaps we are getting to the peak inflation and earnings are coming in better than expected? That dollar weakness giving a little bit of a lift, perhaps, to some of the risk sentiment that we've seen over the past few days.
I note also the Bloomberg Financial Conditions Index does show a more accommodation here, less stress within the system. Claudia Sahm writes brilliantly about the stresses within the American political economy, founder of Sahm Consulting, writing for Bloomberg Opinion in the New York Times, and a former Federal Reserve economist, and always interesting, even if you don't agree with her. Claudia, David Blanchflower published a working paper at NBER yesterday with some colleagues from Dartmouth, and it's real simple. He says, calm down. The labor economy is not hot, hot, hot. Wages are not hot, hot, hot. You say that may be right, or the worriers may be right as well, and there may be a middle ground. And what we need is time to let things solve out. Claudia Sahm wants to go out the x-axis. How much time do we need to get this fixed?
Yeah, that's the big question. So we are absolutely seeing a very disrupted economy begin to heal. That is one important interpretation of the jobs report that we saw last week. We have a lot of hiring. We do have strong wage growth. How else are you going to solve a labor shortage and bring workers back without paying them more? That is absolutely a piece of what we're seeing now. We see services becoming more prevalent in consumer spending. So a lot of the disruptions we saw appear to be unwinding. they got to unwind faster than the Fed keeps going with the rate. So that's the big question if we have enough time.
The politicians, Claudia, have a timeline which is based on election days. You don't, and we don't either. Is this an inflation story to be solved in quarters or years?
To be fully solved, it's a solution over years. I think we could and are on track to be seeing some relief in the coming quarters. If we don't see it, then we're going to a very weak recessionary place next year. So that'll do a good number on inflation if we get there. But I think a path that's really a healing that is slow but steady, pointed in the right direction, gets us back to something like 2% in 2 or 3 years. This is not a quick turn in terms of, turning back the lights on, getting us back to a normal. That just takes time.
Well, but Claudia, the new normal is something people have been talking about, especially with the participation rate remaining so low. And this is the reason why the likes of Denny Blanchflower and others say there's more slack in this labor market than it may seem. Do you understand why there are so many people still not going back to work? Is it long COVID? Is it retirements? Is it all of the above?
There's some very good research, though it is preliminary, that the long COVID, just that piece of it, could explain 2/10, 3/10 off the labor force participation rate. That's pretty close to a fifth of that gap that we've seen open up. So that's a piece of it. We know people still have care issues, just the ability to be working. We've seen a lot of people unable to work as many hours as they want to because, they get sick, they have to come home. There's a lot, and then older workers that took this as an opportunity to retire. Some of them could have retired a lot sooner.
So, Claudia, the reason why I bring this up is because all of these issues are sticky issues, right? They're not going to bring people back in. You're not going to necessarily see that participation rate go up. So when you talk about time, what is your fear that if the Fed does back off or doesn't raise rates as quickly to allow some time, that it gets it wrong yet again when its ideological framework has been proven wrong or at least delayed again and again?
I think it's a matter of interpretation. The Fed's baseline interpretation of what's happening in the labor market is running really hot. There are signs that demand is cooling all over the place, the business investment, the consumer spending, but when they look at that labor market, they're seeing hot. Not everyone, right? Governor Waller has expressed some views about the vacancy rate coming down without unemployment rising. That is clearly a correction of some structural issues. So the Fed is open-minded, as the Fed always is. Their baseline has been looking at the labor market. It's too hot, it's unhealthy, and that's what they're trying to cool down. That could be too much.
Well, Claudia, to that point, looking at the Nfib Small Business Optimism survey that came out, 49% of all owners reported job openings that they could not fill in the current period. So is what we're talking about realistically just an absence of hiring, but not necessarily businesses that are going to be outright firing people, especially as they've had difficulty bringing people back after layoffs during the pandemic?
Right. A lot of the jobs that are missing are part-time jobs. I mean, so we've seen an increase in the multiple job holders. We've seen people moving back from self-employment into being employees. That was a very unusual pattern in the crisis. The optimistic scenario is that the first place, if businesses see demand slowing down, which it clearly is, and it's been at an unsustainably high pace, when they see it slow down, that they're going to go first to pulling job openings and not firing, because they've learned, hopefully at this point, that if you fire a bunch of your workers, it can be hard to bring them back.
Claudia,
so I think
we got to go because of breaking news. Claudia Sahm, thank you so much, particularly on inflation tomorrow and some of the labor linkages that we see there as well. Lisa, it is a single headline that has been widely expected. This is not just a pipeline like Nord Stream or all the rest of it. This is the mother of all pipelines. Started in 1960. It's the longest pipeline in the world out of the sprawling Russia south of Moscow, and it just simply has three legs, one up to Latvia and Lithuania, one across Poland, and the other one across Belarus and Ukraine. The Russians shut it and oil moves.
Yeah, we see oil prices climbing on the heels of this to session highs after a number of days of declines. They started picking up yesterday. How much does this really start to change the calculus as people start to take the idea of reduced supplies of Russian oil and, more importantly, for the Euro region, gas down more substantially? That's sort of the worst case scenario, is if Russia cuts off these supplies. How much can they get ahead of this at a time when there really are some clampdowns already? There were some reports about how in Scandinavia, they're constraining their gas exports to the rest of the world because they, too, are facing shortages and want to preserve for their own homeland.
And what's so important here, and Kaylee, it's Javier Blas, who was out earlier this morning in the European Morning on linking all this in to what's it actually going to cost in Europe and the whole recession battle in Europe as well. I mean, it folds right into that.
Well, that is the gigantic question mark overhanging the European economy, Tom. So much of it is dependent on the flow of fossil fuels from Russia so that they can power their economy and get through the winter. And as the ECB tries to hike rates in order to tame inflation, how do they do that knowing that you could be facing a deep recession in Europe if the gas gets turned off? And of course, then do they have to respond even further to those inflationary forces on energy prices? It's just this vicious circle that makes it impossible to do a monetary policy job at the moment for Europe, Tom.
It's interesting, Tom. You mentioned the gas prices, and the gas prices did increase. Oil prices increased on the heels of this headline. But you see a knee-jerk response in equity futures in the United States. And how much is what we've seen in terms of the resilience, the buoyancy, the momentum, how much has that been driven by oil prices coming down so dramatically over the past couple of weeks?
Can we agree that maybe the recession worries have drifted away a little bit with the bang-up jobs report on Friday?
People are.
I don't know where to go with that.
You know, I think it's a valid point. I think it's a really important point that the jobs report on Friday was a game changer for a lot of people. This is not a recessionary economy in the short run, at least if you believe that data, and if that data is not going to get revised substantially lower. If that's the case, then A, how much does the Fed have to go to bring down growth enough to get inflation lower? And B, how much is this completely on the heels also of this idea that oil prices are going to be constrained, that there's not going to be another shock, right? Yes, I do think that report was a game changer in terms of resilience, but I don't know that people are really necessarily not worried anymore.
Waiting to see what happens with Netherlands gas here and the such. What I can tell you is West Texas Intermediate, 91.54, up 78 cents. That's off an 88 level of a day, 2 days ago. Brent crude, 97.60. It was up a little more moments ago on the shock of that headline that the major Russian pipeline to the south has been shut down as of August 4th. As Lisa mentioned, equities pull back a little bit now, red and green on the screen in one big churn. Lisa, we've got a minute here. It's a good minute here on Bloomberg Surveillance to get an update on IG and distressed. We haven't done that in 3 or 4 days. How are they doing in the spread market?
Well, this has actually been one of the reasons why a lot of people have been pushing back against the gloom, is because if you believe that the credit market does lead the equity market, the credit market is sending the all clear. And you've actually seen the ongoing rally in investment grade, in high yield. People are being able to come back to the market to borrow, and investors are flooding in to buy. How much can that continue? I mean, honestly, this is one of the big questions. People are talking about investment-grade credit. We're going to be speaking with Wei Li of BlackRock later on in this morning, and she's very high conviction on investment-grade credit away from equities. How much does that continue?
I mean, we're going to have to see on this, folks. It's a huge swirl. And, of course, what we know about the swirl as it comes into the detail, we'll see tomorrow in the inflation report. We'll give that to you at 8:30 with Michael McKee as well. And, Kaylee, as we've heard from so many guests, including Tony Roth, core is what people are going to look at.
Yep, 8:30 a.m. Eastern time tomorrow. So what, 26 hours from now? A little bit less, Tom? That really is what this market is waiting for.
26 hours. It's another chance for the Red Sox to lose, which is probably what will happen into the inflation report. Futures in -7. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who don't want him to run for president. That's after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation onto whether he took classified documents from the White House when he left office. The former president was in New York during the search. ETF manager Kathy Wood says the US is already in a recession and the Fed will have to start loosening sometime next year. Wood spoke to Bloomberg TV.
We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same.
Wood says her funds will stay fully invested during the downturn in what she calls innovation. The Pentagon estimates that as many as 80,000 Russian soldiers have been killed or wounded since the invasion of Ukraine. It's the first time the U.S. military has announced its estimate of casualties. In March, Russia said more than 1,300 soldiers had been killed. It hasn't released any numbers since then. And Boeing is set to resume deliveries of the 787 Dreamliner as soon as Wednesday. That is almost 2 years after they were disrupted by manufacturing flaws. The FAA says that Boeing has made the necessary changes to ensure the plane meets certification standards. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I'm not expecting to see a sudden increase in prices, but come the winter, particularly after November, 1st of November, the SPR stops. The market is going to tighten up very, very quickly. So we still maintain our forecast of over $120 by year end.
And Marita said an extraordinary discussion there, and we heard that from a couple other people yesterday, of really repricing and saying, forget about the pullback in oil. Yes, 80, 90, we're there, and then with demand, we will get back to 120. Lisa Abramowicz, I thought that was really extraordinary yesterday.
Especially with the idea that after the November Party Congress in China, there could be a relaxation of zero COVID, adding to demand at a time of incredibly tight supplies and cold months. How much does that remain the base case, even for the likes of Goldman Sachs, which ratcheted down their near-term forecast for crude, but kept their longer-term forecast?
They kept, Kaylee, the fact is Jeff Curry kept 2023 at a 120 level. They're really pushing back against Ed Morris at Citigroup.
Yeah, and it really comes down to just not just the supply constraints, but the demand one as well. China, obviously a factor in that as well. But if you believe that this recession may be shallow, that demand is actually going to prove resilient, and you still have restricted supply, that's going to keep prices elevated for some time to come.
On data, the markets have pulled back here off the news from Russia. The Druzhba pipeline, the largest pipeline in the world. This is the venerable pipeline that stretches all across Russia, and one leg of it through Belarus and Ukraine has been shut down. Oil moved immediately up $1.97.56 on Brent, worth watching. And as Lisa mentioned, even equities in the U.S. pulled back from flat to a little bit down. Futures negative 10. We get lucky because Kevin Book was previously scheduled, head of oil research for Clearview Energy Partners. It was to be a nice, lovely discussion of climate change and Biden legislation. Forget about that. We need to rip up the script, Kevin, and we can do it with you. These pipelines, we talk about them in the media like, they're out there somewhere, but they're absolutely critical backbones to the continent of Europe, aren't they?
Oh, yeah, Tom. Good morning. Good to be here. The pipelines going west from Russia are the critical link to energy security in Europe. And a lot of the energy security planning that's going on in Europe right now is watching this, not only for the oil story, which I think we'll talk about first, but also the read-through to what it means for gas. If there's supply getting cut off in one stream of flows from Russia, what does it mean for another? Russia's willing to flex its energy muscles against Europe, and this could be a sign of that.
Kevin, how much is this already priced into a market that is being hit very much by a decline in demand that's perceived by the slowdown in economic momentum?
Well, Lisa, a couple of things here. First, I think we should probably think about the Iran deal on the horizon, too. Some downside travel to crude in the last week could be linked to that. That still seems like it's tracking towards maybe the closest it's been to a yes in a while. Demand as well. We probably may want to look at the numbers that we see on the monthly basis from the EIA more than the weekly numbers. It's possible demand's not quite as weak in the biggest consuming country in the world as it has looked in recent months. But as far as the Druzhba pipeline southern leg, we're talking about 300,000 barrels per day, maybe 350,000 barrels per day of supply missing from the market at the maximum out of about the 750,000 that travels over the whole pipe. So in terms of magnitude, the Iran deal could bring roughly 2 to 3 times that upside in supply to the market.
How much is this something that is going to be an on-again, off-again kind of transition throughout the rest of the year and beyond, with Russia kind of halting and then putting back on some of these gas and oil pipelines? I mean, how much is that basically a base case that, in your view, has not been priced into the market yet?
In our view, it has not been priced into the market, and there's a couple of dates to watch. One is tomorrow, which is the onset of the European coal embargo. Don't think that Russia is going to just sit there and say, oh, cut us off from our market. And we'll be happy about it. There's always a plausibly deniable pretext for the shutoffs. It's munitions found on the sea bottom in the Black Sea for the Caspian pipeline terminus at the marine terminal there. It's because there's ruble payments that aren't going through for gas. And now it's payment problems, according to the news reports I just saw, for Druzhba. But plausibly deniable or not, the point is that when the West clamps down on sanctions on Russia, Russia clamps down on supply to Europe.
Okay, so as for how this is going to translate to the consumer pocketbook, Kevin, we have seen gas prices coming down every single day for more than 50 days now. Is that sustainable, or are forces like this going to drive them back up?
Well, there's a couple of things that go into those gasoline prices. One is the oil price, which is, if it's headed back up, going to affect gasoline prices to the upside. The second is refinery capacity running flat out has done a lot to bring inventories on stream as demand appears to have been weakening some. You get more inventories, the prices go down. But that could also change. At any given time, there could be refinery outages.
Kevin, you've got such an international reach here. Let's take the domestic expertise of Clearview Energy Partners. And there's comments on climate change and what we've seen with the legislation with President Biden and the Democrats in the Senate, and we presume in the House. But bring it over to Europe. There's a war going on in Europe. With the use of coal increasing, is ESG and climate change not dead, but delayed within Europe, and how much?
Well, officially, the answer is no. And probably in the long term, the case for transition could never be stronger for Europeans who want to go that route. But in the near term, those molecules that are missing from Russia don't have electrons to replace them in Europe. And so the heavier hydrocarbon that you mentioned, coal, that's coming back on stream. In July, the German Energy and Climate Ministry put out its third update on energy security, where they basically said as of July 14th, they've got new rules in place from new laws allowing them to put coal from a strategic reserve back on the grid. So they're burning more coal right now.
That's what we love about surveillance, folks. We get lucky. We have this news out of Russia on a shutdown pipeline, the right guest at the right time. Kevin Book, thank you so much, of Clearview Energy Partners. Lisa, it's just amazing how our booking team does that. It's like, they're channeled into Mr. Putin and what the next announcement's going to be.
I want to highlight something that Kevin said, and this is really important. It seems to be underpinning some of this news as I read more details about it. How much is Russia going to take out its aggression against sanctions from the U.S. on Europe by constraining oil and gas exports? And they basically are saying this has to do with an inability to pay, with an inability to really transact because of those sanctions. How much is that going to be the fall case for them increasingly as we head into winter?
Now, Kaylee, stronger ruble. There's 3 ways to quote ruble. We look at dollar ruble coming in a solid 1.16 down to 60.76. And that shows, again, the sanction battle with Russia and what they're doing. Of course, Kaylee, the discussions of Mr. Putin with Mr. Erdogan in the last 24 hours is part of the mix as well.
Absolutely. I think the strength of the ruble, the resilience of it since Russia invaded Ukraine back in February, Tom, has been astounding. The impact on the Russian economy just hasn't been quite as severe as you would have thought when the first round of sanctions were starting to be introduced. But of course, it goes both ways, right? You cut off the flow to Europe, you don't have that revenue coming in. So is it a question of just sending it other places like China?
American Oil, West Texas Intermediate, up fractionally, $91 a barrel, $6 spread. Brent crude, $98 a barrel. That gets my attention. We'll have to monitor that through the day. We're going to get back on track here with a study of the equity markets and, of course, this huge inflation report tomorrow. Tony Roth was something about everyone calm down. Futures and -9, the VIX 21.87. For John, the Dow off 10 Dow
thanks you.
points. This is Bloomberg. Good morning.
Yes, we're avoiding an imminent recession, but we've got to look at what potential growth is going forward.
You've got that strong dollar, you've got a Fed tightening, and you've also got a global economic slowdown.
We think we will indeed see that slowdown. We don't think it's going to be all that far away.
The economy is going to slow, but it's not going to slow so much that you're just going to see demand fall off a cliff.
I'm definitely not in the soft landing camp. I think we pushed too far.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. A must-watch hour for you. We're going to start strong on the dynamics of the equity market. Lisa Abramowicz, it is, I don't know, a bull market, a bear market rally, whatever. It's unloved, isn't it?
It's unloved to the biggest degree potentially in history as far as the divergence between some of the bearish views and what we've seen in the market. However, today not cooperating with that, with a sudden shift in the market tone on the heels of that headline about a pipeline from Russia to Europe getting suspended in terms of the oil imports. How much does that change the landscape after we've really ridden on this decline in gas and oil prices for the past couple of weeks?
Brent crude up a stick 97.80 right now on Brent crude. We'll have to monitor that very carefully. Kaylee Lyons, you know, we're really getting towards where we dive into this inflation report. Let's summarize it right now. The gross look at it is the top line number and the core number, and I hear the pros talking about the core number.
Right, because on the headline, gas and food, those prices, which we know are more volatile, should in theory have come down as we see prices at the pump lower and food costs moving lower as well. But it becomes about those stickier components of it, what is contained in the core, because ultimately that is going to decide how quickly the Federal Reserve is going to be able to take its foot off the gas pedal. As you know, have Citi talking about potentially 100 basis point rate hike in September if inflation is still hot and the labor market looks as resilient as it did on Friday.
And Lisa, the bond market, and I guess we go to 2's10 spread as well. What's the spread away from the vanilla spread, Lisa? 2's10's at negative 45 basis points. What's the spread you're watching?
I mean, it's inverted all across the board. What I was watching for a while was the 3-month 10-year spread, which had actually been widening for a while and then contracted violently at a record pace. And this was one area that the Fed looks at themselves and they were saying, look, it's not inverted, we're all fine. And now it's getting closer to that point. All of these indications, just for the big picture view, are saying there is going to be a deceleration and possibly a downturn. The jobs report didn't confirm that.
Yeah.
Some of the earnings have not confirmed that. So how do you parse that out with the pessimism of a Fed that is forced to act to curtail inflation, regardless of whether the economy wants to cooperate right now?
I'm going to do the data check now so Lisa can wander over to the briefing board, because there's a lot to brief on, frankly, folks. And for those of you on Bloomberg Radio, I really can't emphasize enough how things come up on TV in a banner form, and I'm just absolutely stunned to see the 2's10 spread at negative 45 basis points. This massive and rapid inversion is really extraordinary. The 10-year yield, 2.79%. The 2-year yield, 3.23%. Red and green on the screen this morning. I should mention the dollar churning is the way it is. And of course, oil with the Russian news, a big deal. And Brent crude reaching out 97.89 right now. We'll watch that global, that more continental Europe price of Brent crude up $1, one now 91.77 as well. We need a complete briefing. We do that with Lisa Abramowicz.
Thank you, Tom. I would say the most underrated economic data point of the week is going to be this one at 8:30 a.m., and that is U.S. non-farm productivity for the second quarter. Productivity is a measure of how effective people are in their jobs, and what you are seeing increasingly is people are getting paid more because of inflation, but producing less for a variety of reasons. You saw that last quarter, and the expectation is for you to see it again. Typically, what that means is it means that later on there will be job freezes and then layoffs as companies try to trim costs because of that lack of productivity. That comes ahead of CPI tomorrow, PPI on Thursday, and University of Michigan consumer sentiment on Friday. Today, it'll be really interesting to see some of the discussions, particularly from the semiconductor chief executive officers. President Biden is signing the CHIPS and Science Act of 2022 into effect. At 9:30 a.m., we do have the CEO of Micron slated to speak with us after ratcheting back forecasts for their their fourth quarter earnings. How much can we quickly bring some of this manufacturing online to curtail any additional disruptions? Really, I want to hear the mix of what kinds of chips they're making and what that means about where the demand is. And today is the tail end of the earnings season. We've had about 90% of these S&P companies already reporting. Today, we get Norwegian Cruise Lines, Wynn Resorts, and Roblox. Norwegian Cruise Lines, from some Wall Street analysts, have been left for dead. Do we see some sort of rejuvenation, at least in some of their projections? Wynn Resorts, a real tea leaf into the consumer discretionary spending. And Roblox, Tom, I put that there after dropping 53% because, during the pandemic, that's what all the kids were doing. And then, not so much.
It's on my computer and I don't know what it is. It's a kid's game?
It's on your computer. Yeah.
I don't know what it is.
It's a whole ecosystem. It's a metaverse.
It's an ecosystem. It's a metaverse. Wait, so is Bloomberg surveillance. Right now, and I've really been looking forward to this, Anna Hahn joins us, equity strategist at Wells Fargo. And what she's been writing about is what the pros write about, but is not done enough in the media, and that is short covering. Short covering is when you bet on something and you go, oops, I got that wrong, and you cover your trade to get out of your negative toned short position. Anna Hahn, what is the convexity of shorts right now? Are there more people that need to go, oops, I got it wrong?
Well, Tom, also there's the other side. Hopefully, if you shorted and it went your way, that's a good time to close out the trade. But I agree with you. I think in this context, what we've seen, especially with the rallies in equities, especially with that voracious risk appetite last month, it's more people going, oops, might have had that a little wrong, or the pain has become too much. They have to close that trade at a loss. So with that happening right now, I think it's a reflection of this surge we've had, this trader confidence with markets going higher, and potentially, if we are going to see that the economy can remain resilient, even in a tightening monetary scenario, it bids up that risk appetite. That's what we're seeing right now.
But Anna, how much does this just mean that the Fed is going to come in and bring the sledgehammer to all of this enthusiasm and say, guys, you're not cooperating with us. We have to tighten financial conditions. And meme stocks are on a tear and everyone's just getting excited again. How much is the Fed going to stop it if it does go too far?
Well, the interesting thing about that, Lisa, is the Fed here might actually take that in a way to be more confident about continuing to hike at a breakneck pace. When equities shake, equities being such a large part of household wealth now, that means consumer spending power also gets weakened, and that can put the economy into that snowball effect of contracting faster than was intended. But for the Fed right now, it actually might be easier for them to continue to attack or at least try to bring under control this inflation issue while consumers maintain somewhat of a slowed down but still spending so the economy can get through this. And in a way, maybe that's part of what's also built some of this confidence into the market and why equities are grinding higher despite concerns about a recession. We're still seeing positive news that perhaps equities can still go higher in a tightening environment.
Well, let's talk about where that leadership would be coming from, and especially in the context of the inflation data we're set to get tomorrow. Anna, if it's hot, if it's cold, what does that mean for growth stocks?
That's a great point. I think that if it's sort of inline or cold, it's going to be a further boost for growth stocks in the sense that perhaps yields cool down in the front. Maybe we'll see a little bit of the front of the curve come down a little to match more expectations. But at the same time, if it comes in hot, if CPI, particularly core CPI, surprises the upside, for us here at Wells Fargo, we expect a little higher than consensus, but even higher than that, I think you're going to get, again, these recession fears stoked. And in a time where you expect the Fed needs to play catch up and potential for recession to come faster or not as shallow as hoped, that's going to put growth even more valuable in that sense and want people to add growth exposure to their portfolios.
Anna Hahn, tell me what the physics of quality is. Everybody's tossing around the word quality now like they know what it is. What is quality to you?
For us, there's a lot of ways you measure quality, but Tom, I like to look at kind of a multi-factor approach here. And a large part of quality can be really the ability to do return on equities, on stewardship of capital, of cash. But very importantly as well is leverage can be a big aspect of quality. What's interesting is with this tightening environment, you tend to see credit spreads widen. You see credit becomes more expensive. But in the last 6 weeks or so, you've seen credit compression. And usually in credit compression, being in low quality is not as painful. But I don't know how long that's going to last. And that's why for us, rather than go into that low quality approach, we liked a more high quality or neutral, but particularly down in the small cap world, we think that it's not expensive to be in high quality, and we would prefer that.
Anahan, brilliant. Thank you so much, particularly there in short covering, which I think is misused by the media. Anahan of Wells Fargo, always brilliant. Lisa, I need to wander back to oil. I hope you'll go with me. 98.01, up $1.40 on Brent crude. Lisa, there's a gap to fill. There was a jump down from 110 down to 103. So oil, just, if you're a chart guy, you got to go 104 is where we're going.
Well, what I find interesting is how thinly traded these markets are right now, and the lack of liquidity more broadly, and how quickly things can turn. Because this is one headline, we don't have a lot of details, and just the suggestion of it is causing a wholesale shift in the market to a more tentative tone. And to me, that highlights the August moment that we're in a time of great uncertainty, that one headline can really shift perception before we have any more details.
Well, that's a lack of liquidity out there. Kayla, you've read in on this. What is the lack of liquidity? Did you see that like in the bond space where Lisa is, where there's no bids on a given corporate bond, or do you look at liquidity as a different way?
I think it's across asset classes, Tom, because as Lisa says, it is August. Liquidity just in general is thin, which is why so many of these moves in the market seem more pronounced. I just want to bring up a call we haven't talked about yet. Marko Kolanovic, the ever bull at JP Morgan, actually saying it's time to trim back on stocks, which is something he very rarely says, but to do that in order to buy commodities, because commodities have lagged other risk assets to such an extent over the last month and a half or so. And clearly we're seeing commodities, oil specifically, playing a little bit more catch up this morning, Tom.
Bloomberg Commodity Index 60 to a double 130, and it pulls back a modest amount. Kolanovic suggesting maybe now's the time to find commodities. It is never boring. Coming up, Brent Judy will join us here on the allocation of his portfolio. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A stunning development involving former President Trump. Federal agents search his residence at Mar-a-Lago in Florida as part of an investigation into whether he took classified documents from the White House when he left office. The former president said in a statement that FBI agents broke into his safe. He says he's being targeted to derail a potential run for the White House in 2024. The U.S. has announced another aid package for Ukraine. There will be $4.5 billion in additional direct aid and $1 billion more in military aid drawn from existing Pentagon inventory. The military package includes artillery, ammunition, anti-tank weapons, and medical vehicles and supplies. And Taiwan's accusing China of using the visit of House Speaker Nancy Pelosi as a pretext to hold war games in the region. Foreign Minister Joseph Wu says Taiwan is concerned that China will invade. He called the Chinese military maneuvers a violation of international law. Meanwhile, Taiwan responded to the Chinese drills by holding its own live fire exercises. They took place on Taiwan's southeastern coast. In Seoul, South Korea, one of the heaviest rainstorms in 80 years has killed at least 8 people and left 6 missing. The storm flooded streets and subway stations in the capital and caused blackouts. More rain is forecast through Thursday. Semiconductor giant Micron Technology plans to invest $40 billion through the end of the decade to build memory manufacturing in the U.S. The company says the investment will create up to 40,000 jobs. Micron will join the list of those seeking government subsidies from a new law that President Biden will sign today. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
You have so much of the supply chain really that does move through the Taiwan Straits. And when we look at this and revisit what the precedents are, 1995, 96, when you had these kinds of tensions, you had a financial market sell-off, but not that much impact to the real economy. Now the economies are much more integrated.
Joyce Chang, Chair of Global Research at JP Morgan there on China, on the broader Pacific Rim. She was also really quite good on fiscal and the state of America's budget as well. You can see that wonderful report from JP Morgan Of course. Right now, we're going to drive back to what is only one story in America today for our international audience. America wakes up shocked and galvanized about a search of President Trump's residence in Mar-a-Lago by the Federal Bureau of Investigation. Our Joe Matthews briefed us this morning and needs to brief us again here. Joe, Gary Abernathy writes in the Washington Post, and it's a sort of a rambling essay about comparing Mr. Mueller of time gone with Mr. Garland. Do you presume that anything that we will see from the Attorney General will be through the courts this time and not through congressional hearings?
That's a great question. What we saw yesterday would lead us to believe that is the case. But look, we may not find out what they were looking for some time. The two big questions we all have this morning is, what were they looking for, i.e. what did they find? And also, what might that result in terms of any criminal charges or investigations or otherwise? Of course, we can't answer the second question without answering the first. This is a months-long operation that's been going on here in a violation of the Presidential Records Act. But Tom, you know, we've seen the National Archives go back through materials like this in prior administrations. We've never seen a search warrant executed on the scale that we saw yesterday. And so, you know, it's got a lot of people wondering what exactly Merrick Garland knew, who exactly approved this, because a judge would have to see specifically what they were looking for on the presumption that it was on the premises. But Tom, I'll also offer, because everyone's asking, well, when are they going to tell us what they found? The FBI or the DOJ may not tell us anytime soon, but look, they served a warrant. That means Donald Trump likely knows what they were looking for. We heard about this raid from Donald Trump. He could likely tell us this morning what it was they were looking for. If this was such an overblown deal, an abuse of power, then tell us what it was.
Joe Matthew, describe the independence of the Attorney General from the President of the United States. This is storied in our lifetime, from Robert Kennedy and his brother to John Mitchell and what we saw with Richard Nixon. How do you perceive the independence of the Attorney General from 1600 Pennsylvania Avenue?
This is something that this administration has made a big deal about. Looking back on this is how they, say that they're different than the Trump administration was, when you had Donald Trump pressing attorneys general, plural, to pursue different investigations that he thought were worth their time. In this case, the White House found out about it supposedly on the news. The fact that the White House was not tipped off about a search warrant being served at a former president's home, something that's never happened in American history, is quite incredible. But it does serve, if that's true, the story that we hear from this White House, and that is one of complete independence. Tom, it's kind of like when you ask cabinet secretaries about the Fed.
Well, Joe, I love the reference. However, to that point of the independence, a lot of people are saying this timing is actually really bad for President Biden because he wants to talk about all of the legislative wins and the gas prices coming down. Do we have a sense of what urgency there was to take that time and do this now amid all of this other political action?
I don't think so. Again, there's so much that we don't know here that it's impossible to answer that. But look, I think to your point, Donald Trump will raise money on this. His supporters will as well. Members of Congress who support Donald Trump, like Marjorie Taylor Greene, Matt Gaetz, they're tweeting, defund the FBI. This is going to be a new cause and an easy one to make with the CPAC crowd, with a real kind of aversion to federal law enforcement. But you're right, for Joe Biden, he's signing the CHIP Act today. He's got semiconductor CEOs at the White House, some of them talking to you here on surveillance. That was actually the story that this White House wanted to tell today, not a search of Donald Trump's home.
Well, Joe, it strikes me that we're having a conversation really about the state of American democracy when you have a former president's home being searched in unprecedented fashion at the same time that the U.S. is trying its very best to defend democracy in Taiwan, and yet things are getting much more tense, and that is becoming much more difficult to do so as you see China ramping up its activity around the island. What is the U.S. policy stance at this point into how it would like to respond to China's behavior?
Well, they've gone out of their way, Kaylee, to say there is no policy change. They were very deliberate to say that during the period of time leading up to and during Nancy Pelosi's trip. Nothing to see here, no change in the one China policy, precedent for this trip. But what we've seen China do is essentially prove to the world, including the United States, that it can sew them in. It can blockade that island without invading it and essentially make it, leave it cut off from the world. That would have massive economic effects here in the United States, as I'm sure you'll discuss with your semi-CEOs today.
Look for a 3-hour discussion on Sound On with Joe Matthew tonight, the news flow out of Washington. Just absolutely extraordinary at 5 p.m. on radio here as well. Lisa, let us get back to this inflation. We've had such news flow this morning. We've barely talked about the guesstimates of inflation. And to me, the biggest option here is core inflation. I mean, we don't know.
So there are a number of really interesting data points that came out yesterday. There was a Cleveland Fed nowcast that came out, and some people would argue that it indicates a higher headline CPI than currently estimated by Wall Street analysts. The Wall Street consensus is 8.7%, and what a lot of people are inferring from the nowcast from the Cleveland Fed is about a 9%. On the flip side, the New York Fed put out its routine survey of inflation expectations over the next 1 to 3 years, and they sharply fell. So you have real competing tea leaves on the ground in terms of the real-time data.
Should we have a nowcast at home, Lisa, on children's summer reading?
Absolutely not.
Should we have a nowcast?
You want someone
Kids,
tracking
let's
that?
have a nowcast
Seriously?
here. Are we on chapter 2 or chapter 3 of 14 chapters?
Are we in
I need a nowcast.
Yeah, are we in a dismal depression, or are we, effervescent about something exciting?
Who do we blame for this? Do we blame, Kaylee, do we blame the Atlanta Fed for nowcasts?
You can, Tom, if you're looking for someone to blame. But I think Lisa's point on the expectations coming down that we saw in that survey yesterday, that makes Friday's UMich numbers also very interesting after the inflation read we're getting tomorrow, because we know that the Fed is paying attention to those. So if those inflation expectations also come down, is that a good sign for Chairman Powell and co?
Well, we'll have to see. On the yield space, I mean, there it is. I mean, Lisa, it's just as simple as it can be. 3.24% on the 2-year yield. We haven't talked enough about that with a 2-10 spread. I mean, what do we do with a 46 basis point move? We're not there yet, but we're grinding there, aren't we?
And how can it come down? I'm talking about the 2-year yield. If you see robust earnings and if you see a consumer still willing to spend, something has to give.
Anahan and Wells Fargo tilting towards a more robust inflation than some others as well. Futures at -9, Dow futures at -12. Stay with us. This is Bloomberg. Good morning, everyone. Bloomberg Surveillance. Thrilled you're with us right now. Let me do a data check. I want to get into that because we really want to get to Greg Peters as quick as we can. Futures -10, Dow futures -16. They deteriorate. Really, the break here from a flat level down to some deterioration was a headline out of the shutdown of the massive Druzhba pipeline. This is in southern Russia over in 3 parts through Belarus and Ukraine. That moved oil as well. Oil, $98. Brent crude now with a bid to it. There's no question about that. Dollar not giving me much action this morning in the bond market, which we'll get to in a moment. -45 basis points, which is really extraordinary. Let's get right to it on the equity space. Here's the bond expert, Bramo.
Thanks, Tom. Thanks for setting me up like that. Honestly, I've been watching one area with very close attention. The semiconductor space has been fascinating. It has been harsh, and it has talked about a lack of demand at a time when we still are talking about the resilience of Apple. We're talking about the resilience of big tech. So where do we get this sort of balance evening out? Nvidia still falling after yesterday coming out and forecasting a severely curtailed income, missing their revenue estimates by about $1 billion in their latest report. Those shares down 2.8% ahead of the open. Micron also coming out and saying their fourth quarter estimates are going to have to be lower because of a lack of demand for personal computers and other devices. Again, this has been the story across the board. Those shares down almost 4% ahead of the open, and Advanced Micro Devices in sympathy also falling about 2.1%. On the flip side, this is the pain, this is the pessimism. On the flip side, you can find the optimism, all the optimism you want in Bed Bath & Beyond and AMC, because why? I don't know.
These are meme stocks.
Right, exactly. It is revenge of the meme stocks. Why? Go figure. Perhaps people actually are believing in this Fed pivot and think that that will give steam to some of these names. Bed Bath & Beyond.
Steam to the meme. I love it.
Just want to give you a sense. Bed Bath & Beyond, since the middle of June has gained almost 90%, if you take a look at how much those share prices have increased. So at what point are we looking at, Reddit trend lines, and that's the reason why? And what reason are people saying, look, these guys were left for dead during the freak out and are coming back?
Very good. Let us give a little history here on one of the great surprises of the last 20 years. They were those guys over in New Jersey, and in our childhood, they owned a piece of the rock, and they would show you Gibraltar, and they were Prudential, and that's the way it was. Prudential became PGIM, and with it, they became truly one of our best opinionated bond houses. These are buy-side people managing bond money, full faith in credit, investment-grade credit, which Lisa's expert in, and also, of course, distressed debt. But more than anything, they have done it with an opinionated elan that is absolutely second to none. Lisa, that includes the gentleman greeting us this morning.
Yeah, Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income, who is joining us at a time when the one conviction in markets had been longer-term bonds and continues to be longer-term bonds. And you've had such a fascinating view on this, oscillating between conviction and not so much. Where do you stand on an area that has been a haven amid near-term concerns about inflation?
Yeah, so I think the bond market has just reflected the new reality after Russia invaded Ukraine, post-lockdown. So we have seen, and we're still experiencing, this inflation surge and growth surge. And the thing that I'm focused on, and we're focused on at PGIM, is, as like everyone else, the rollover in inflation. But I think that kind of misses the bigger question on the table is, so what's next? And, we were talking earlier, and I think the markets are entirely too comfortable with this notion where it's just going to be a straight line down, smooth and easy, right to the Fed 2% mandated zone. So I still think there's lots of room for volatility, lots of room for rates to move both higher and lower, and credit spreads to be much more volatile and wider on balance.
That's exactly where I wanted to go. This conviction that people have that the Fed will get to their 2% target, that you can see in that conviction for longer term bonds. You can see this also in break-even rates that have actually come down as the Fed jawbones. Do you expect that to change, that as we head into the end of the year and as people start to see a cooling off in some of the inflation data, you get less of an inversion in the 2-10 spread, and that ends up being bad for markets because that means the long end is increasing, yields going higher as people start to question the Fed's ability to get things under control?
Yeah, so it's a good question. I think that there's a high probability that the high-end rates have already been put into this market. A lot can change, so my conviction level isn't as high as it normally is, just given kind of the uncertainty and the volatility and the unprecedented nature of it all. But I do worry about that. But actually, Lisa, I kind of worry about the flip side of that, where once rates do come down, that markets get, or not rates, inflation rates can come down, the markets get too excited over that, and they're declaring victory in the middle of the battle. And I think that's where the whipsaw moment could really come in and hurt investors in a meaningful way.
Well, Greg, of course, it's not just about getting inflation down. It's what it takes to get inflation down. And there is this narrative out there that if the data is looking okay, looking resilient, that means that the Fed can hike aggressively in order to tame inflation and land softly while doing so. But is it actually, if the data is stronger, the Fed has to be even more aggressive in order to actually get a handle on demand and bring prices down, and therefore a hard landing is inevitable?
Yeah, that's kind of been my narrative all along. I've always felt that this underlying strength of the economy, nominal GDP is really quite robust, which is why you're seeing actually earnings surprise to the upside, or at least not be as poor as many thought or asserted. So yeah, to me, the stronger the economy, and this is a very strong economy in lots of different respects, requires the Fed to do more, which in turn means the risk of a hard landing is actually higher, not lower. So I know it's a perverse way to think about it, but that's kind of the viewpoint that I have.
So if they have to do more, which is get the terminal rate to a higher level, what is your expectation about how long realistically they're going to be able to stay there before cutting? Because this market's still betting that cuts are going to come next year.
Yeah, so the cuts in the marketplace next year seem a little heroic to me. That's where I really disagree with the market. So, once again, it's about the path. And I think the market's extrapolating the straight line lower to 2%. And my strong suspicion is that you're not going to move in a straight line. And so those cuts that are being priced in the market next year are unlikely to be fulfilled in my mind.
So, Greg, given the lack of conviction about a specific trade that will be consistently a winning trade, and given your expectation that there is going to be more spread widening, where's the haven trade? Where's the ballast when you start to look at investments?
Yeah, so I think it's about relative value, kind of risk-neutral type of themes. And so one of the themes is actually Europe over the U.S. So, we look at investment-grade corporates, we see a lot more value, even with kind of the move tighter here in Europe than the U.S. We see a lot of value in high-quality structured products. These are assets that should do really well in an environment that, with heightened type of recession risk, and basically playing the front end of these credit curves. So if you believe that these investments that you have will be, quote unquote, money good, will not default, then mining that front end is an area to get roll and carry, as we like to say in fixed income.
Finally, Greg, obviously CPI tomorrow, 8:30 a.m. Eastern time. The print is hot. What happens? The print is cold. What happens?
Well, so I think it's, the market's setting up for a lower print, at least kind of in the whispers. If it is hot, I think that is a decided risk off a type of environment. And if it's at or below, I think we continue to grind here through the course of the summer. Just one caveat I'd like to make, though, is, August is a period of time where there's not a lot of informational content coming through the marketplace. Liquidity is much more thin. A lot of investors are, taking their mandatory 2-weekers. And so let's not read too much into what happens here over the next couple of weeks. I think September we'll get a much better read on really the market, true market direction.
Greg Peters, thank you so much. Greatly appreciate it this morning. Greg Peters with PGIM there as well. Lisa, I'm following the news flow out of the shock of this search of the former president's residence. And I want to make clear, and Bloomberg has this reporting. Honey, thank you so much for this, for bringing it up to date. And it seems to be, Lisa, a trail of the New York Times and Bloomberg, and I'm not sure that timing, out to NBC moments ago, saying that the search was very much centered on materials of the National Archives. The National Archives, of course, Lisa's much more than when you walk up those monumental stairs and look at the USS Constitution. It's about the records of our presidents.
Yeah, and we'll get details, I'm sure, trickled out. Whether we get a full report from the Department of Justice, still unknown. Also unknown, and this is interesting, Joe Matthew was talking about this, the urgency. That typically the Department of Justice would need to have some sort of urgency to do it now. And what would that be, right, as they go on with some of their other investigations, particularly that we've heard from Capitol Hill?
I mentioned this for an international audience, Lisa. I mean, the Attorney General always has a unique position within the cabinet. But one of them has been what I would call sort of a collegial visibility, where they're sort of, as a general statement, they're out there, they're visible. Can we say that about the President Attorney General?
I think that there will be a lot of discussions historically of how to place this. The significance of it is that it is coming at a time, as Joe was talking about, that President Biden would like to be taking a legislative victory lap. And now we're talking about...
Oh, what a distraction. Yeah,
that's
absolutely.
exactly it. And so heading into the midterm elections, the Democrats had been gaining steam when it comes to maintaining the Senate, at least by polling. And then, how much does this distract and take air out of the room at a time when there are a lot of different focuses?
And, of course, one of the great distinctions of Merrick Garland is he's a former judge. That's often not the case for the Attorney General of the United States of America. It is truly an historic day for America, and it's not an historic, I don't want to oversell it, but it's Inflation Wednesday tomorrow. Neil Dutta will help us out with the Renaissance Macro. Futures deteriorate, -10. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who don't want him to run for president. That's after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation into whether he took classified documents from the White House when he left office. The former president was in New York during the search. A new working paper from the St. Louis Fed says that ending emergency jobless benefits had a significant impact on boosting employment. That may underscore Republican criticism of a Democratic program. The federal government provided enhanced benefits during the pandemic. It increased eligibility to many of the unemployed who would not otherwise be covered. And Hong Kong said it had no plans to relax the stamp duty on home purchases. That followed comments on Bloomberg TV from a top government advisor that it was among policies being considered to shore up the economy.
Mainland residents, mainland professionals, they have been clamoring for the double stamp duty to be waived for them, even before they acquire the right of abode. You know, we have received a lot of requests in this direction.
Will you do that?
I think the government would, well, it's all a raft of measures are under consideration.
The comments triggered a rally in local developer shares. The stocks pared gains after the government said it didn't plan to reduce property taxes. And the Pentagon estimates that as many as 80,000 Russian soldiers will have been killed or wounded since the invasion of Ukraine. It's the first time the U.S. military has announced its estimate of casualties. In March, Russia said more than 1,300 soldiers have been killed. It hasn't released any numbers since then. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
It's that global slowdown that is supporting the dollar despite the fact that the US economy is slowing as well. And that's the mistake dollar bears have been making. They've been saying, hey, the US economy is going to slow, the Fed are going to have to slow, the dollar is going to slow. But the reality is the dollar does well when the global economy is under pressure.
Dara Mayer representing HSBC, and no one has been more resilient, strong dollar than HSBC. They've hit the ball out of the park on that call for the last 4 or 5 years, and he really reaffirms how difficult it will be to see weak dollar. Right now, futures negative 16. They deteriorate. Some of the catalyst here was oil news out of Russia, with oil up a stick larger. Brent crude 98 to round it up, $98 a barrel is worth watching. And Lisa, we got to go back before we drag ourselves over to Dr. Sassower to the 210 spread. I'm sorry, negative 45 basis points, and every ability to be more inverted.
And what is the ramification for a Federal Reserve that has to hike rates to such a degree based on longer-term expectations? That is part of the unknown. What's the lag time before we start to really feel it?
Yeah, the lag time is to define how many islands you can meet in Greece. Damian Sassower joins us, tanned and rested right now, Chief Emerging Markets Credit Strategist in charge of Athenian Islands. You know, I look here at the emerging markets, whether it's Greece or any of the others, and I say, in the pro business, you partition them and you focus on a category. Which is the group of EM now that our audience really needs to focus on?
Well, those with high debt to GDP, right? And, you know, Kenya comes front and center here just because of the elections. And as we know, Kenya has a history of having a bit of social unrest around these elections. So it's actually a good thing to see that we're not seeing a lot of that.
Is it an EM economy or a frontier economy, well, even more remote?
Those with debt to GDP well above 70%, like Pakistan, El Salvador, Kenya, Ghana, Tunisia, they're all facing trouble and they're all living out along the frontier. So those are the ones that obviously come front and center for me. They've all rallied pretty big on this move over the better part of the last 2 weeks. I'm talking their dollar bonds. But for me, my goodness, I think there's more pain to come. The real question for me is what's interesting is how the street has completely underestimated the U.S. Treasury's ability to trim its borrowing. And so you're not seeing them crowding out other asset classes, right? We thought that spreads would widen. I personally thought spreads would widen far more than we've seen because you would see a lot more Treasury issuance. We're just not seeing that yet. Whether that changes, and obviously it's probably due to the tax revenues due to unemployment being at the lowest since 1969 here in the U.S. And so, you know, they don't need to borrow as much, but, you know, how long is that going to last? The verdict is still out, Tom.
There's still one area, Damian, where you are seeing some pretty significant spread widening, and that is Chinese junk bonds tied to home developers. And this comes as China ordered a surprise audit of the $3 trillion trust industry, which is one of the financing mechanisms for a lot of these kinds of home loans. How much are we watching a slow motion train wreck when it comes to the housing market of China that they're trying to kind of manage, but also allow to a little bit more freely float?
Well, I mean, it's a $200 billion market. I'm talking about high-yield China debt, and it's off the reservation. I mean, Lisa, it's uninvestable at this point from my perspective. And I think really when you talk about the trust industry and how they've repackaged a lot of these developer obligations, property developer obligations in China into investment wealth products for high net worth or for local Chinese households to own, yeah, you know, that's $70 billion that they need to basically make payment on before the end of this year. $70 billion that these property developers need to pay the trust companies. Good luck. Good luck on that one. So, you know, I think a lot of these trust products are going to feel the pain here. Certainly, I think an audit is warranted. I think it's quite frankly far overdue.
Yeah, and of course, the subject of our big take story out on the terminal today, Damien, is the Chinese junk property debt market and how it basically is all but dead. Why isn't China doing more about it?
I don't know how much they really can do, right? I mean, the reality is what they're trying to do and what they're doing successfully is trying to limit the contagion from spilling over into the banking sector, right? And so ICBC, BCom, you know, all of these banks are being encouraged to lend to property developers to help bail them out. But really, at the end of the day, right now, it is the trust sector that's been bailing them out, that's been taking over these unfinished properties. You know, in China, you know, you pre-finance your purchases of homes, right? So, you know, they basically are pre-funded and the homes are not yet ready. So it's up to these trust companies to finish the development. They're unable to do that. You know, SOEs are not stepping in. It's getting really bad. You know, you saw Logan basically restructure 5 of its dollar bonds. You saw, you know, Greenland basically, you know, they need a basically support from 2 large SOE shareholders. So there's more morass to come in China, and certainly the property sector is a place that U.S. investors want to stay away from.
How much will that bleed through beyond China, Damien? I mean, I remember when we first started talking about Evergrande, which feels like a million years ago, we were all talking about contagion. Are we still talking realistically about substantial contagion?
I mean, absolutely. And look, I think, you know, for emerging markets writ large, you know, it's been dollar yuan. And so for me, dollar yuan's now at 675. It's been weakening pretty considerably in the face of all that's going on. And I think, you know, you could expect some more of that. You know, you saw some pretty good data out of China. I'm talking about on the trade front. I think their trade surplus rose to the highest on record just this weekend. But the interesting thing about it is a lot of it is being driven underneath the surface by steel, textiles, but most specifically autos. And when I say autos, you know, Geely and Great Wall China, the 2 biggest Chinese auto manufacturers,
right.
Dude, their sales have doubled in Russia. Their exports to Russia are up 22% year over year. Russia-China trade is something we need to keep a close eye on.
How's Mexico doing? On the border, we haven't talked about it much. It's almost off the radar, it seems, within global markets. Give us a 6-hour update on Mexico.
Well, Mex peso over the long term should benefit from reshoring, right? You would think. But we just saw a massive inflation print this morning. They're going to raise rates on Thursday probably by 75 basis points to 8.5%, Tom.
Is that because of Powell? Did they have to, I mean, is that the power of the central bank?
Yeah, because they track the U.S. I think so, you know. And so, you know, you've got Mexico. Peru's probably going to raise by another 50 bips on Friday. So, you know, you see the Latin American complex really raising rates. But if there's one emerging market you need to keep an eye on because we're ahead of the curve, it's Brazil. You know, I mean, you'd be paying in the front end of every emerging market, but Brazil's one where you really have to be mindful of the fact that they were a first mover. They've tightened rates fairly significantly, and if there's one market you may want to receive in the front end, it would have to be Brazil. But
listen to you. Yeah. What does receive on the front end mean?
It means you want to buy short-dated paper.
You want to buy 2-year Brazilian paper.
Less. I would say, you know, 23s, 24s on the DI curve. That's the Brazilian futures curve, like the Eurodollar curve in Brazil. I'd say that's probably where you want to pick your spot.
See that, Lisa? We get a window into the land of Cesar there. I have no idea what he just
Aaron
said.
Judge just hit his 44th home run, Tom.
It's just random association.
Can I get a Yankees update as a bonus round?
Okay.
Are they going to trade Judge? What are they going to do with him?
They got to re-sign him. Well, I mean, all this talk about Soto and the re-signing him, I mean, Judge would have been very upset, I'm sure, if that happened.
The Padres are batting 130 or something since they got Soto.
Have you watched The Captain? Have you watched the Derek Jeter documentary on ESPN?
I have not. You're the 15th person who said I should.
Phenomenal.
I'm a big fan, actually.
It's really, really good. You have to watch it. Yeah, no, I mean,
I was honored to speak to him when he was a Miami, whatever they are.
Yeah, whatever.
That's good.
Nailed it, Tom.
Who books Sassauer? Can we look? These interns don't understand. I mean, NYU. Can you understand? We don't book Yankee fans. Okay, thanks.
Chicago, Virginia. Please tell us.
No, I don't know. I don't never remember their names. I just name them by their school. There's like Northwestern and
Vanderbilt.
NYU and Vanderbilt. Well, we take kids from Vanderbilt, but they, you know.
Yeah, they act out a little bit.
They act out like you. They act out a little bit.
Yeah.
Lisa, help me here. Damien
Yeah, we're still on TV. Did you know that? We're looking right now at the losses that are deepening with the NASDAQ down 0.7%. And this really does come on the heels of that oil headline with respect to that Russian pipeline. How much is that really going to really dovetail the position? Yeah, go ahead. You can keep talking with Damien about your teams. But really, I want to see how much this sticks, especially into the close after yesterday's reversal. From New York, this is Bloomberg Surveillance.
Look, it's just clear that the Fed has a lot more work to do.
They're behind the curve still. Inflation is still by far our biggest problem.
Everything we're hearing from the Fed is be patient. We want to see the numbers on inflation. We need them to come down.
We feel that the Fed can probably do its job and get things done in terms of bringing down inflation.
I think by the end of this year, we're not talking about inflation anymore.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
It's Non-Farm Productivity Tuesday from New York City for our audience worldwide. Good morning. This is Bloomberg Surveillance live on Bloomberg TV and Radio. Tom Keene, John Ferro, and Lisa Abramowicz. John off for the entire week, not just today and yesterday. And Kaylee Lyons very much in the seat. We appreciate it, and happy birthday. Tom, I do want to get a sense of how much this is a data-dependent market. We see it's a data-dependent Fed, at least what they're saying, even though they give a lot of forward guidance. However, we are seeing each data point really move the needle.
And what's important is beneath the headline data, never has mattered more, and that's what we're going to do today with productivity and all its complexities. But Lisa, I would really take it to tomorrow, where we've really got to parse out the inflation data, not just look at the headline number.
You made a great point earlier, Tom, where you were saying that the non-farm jobs pay number that we got on Friday was kind of game-changing, and I would agree. What I've heard from a lot of analysts was it confirmed this idea that a recession was not imminent in the economy. How much does that CPI print potentially end up being game-changing as well if it comes in not lighter than expected, but hotter than expected?
It can be either way, and we've seen those two different opinions from our guest, Brent, Judy, to join us here in a moment. Will no doubt weigh on that as well. But what's interesting to me is not so much the makeup of core in headline, but Lisa, the makeup of the service dynamic versus the goods dynamic, and the major surprise to the optimists may be goods disinflation.
And that's what a lot of people were kind of expecting, this sort of roving inflation. I keep going back to that because it's not sticking in one place. It's going from sector to sector, maybe moving away from washing machines and going toward rents. But Kaylee, how much are we seeing that in some of the dispersion in earnings? Because we've seen almost 90% of S&P companies report earnings, and it's been all over the map in terms of the optimism or pessimism, but overall resilience is the word.
Resilience, or at least less bad than feared, which doesn't necessarily make it great, but at least it's something, and that has provided somewhat of a ballast of support to the equity market. But you have plenty of people, Mike Wilson over at Morgan Stanley, David Kostin at Goldman Sachs, saying looking forward into the rest of this year, that margin pressure is going to come in as you look at producer price inflation that, of course, we'll also be getting later on this week, and that continuing to be a persistent pressure. My question, Lisa, is if inflation is still running hot and the labor market is resilient, doesn't that just mean that the Fed has to be even more aggressive in order to actually get demand down? Does that mean the economy is too strong, so their policy doesn't have as immediate as an effect?
And that's what Greg Peters was getting at, that he doesn't buy this idea that the Fed is going to be able to cut rates next year because of the intransigence of this inflation. But Kaylee, give us a sense of how good or how bad the earnings were. I mean, how much is Mike Wilson's view a faith-based view on what's to come rather than on-the-ground tea leaves now?
Well, the backwards look was okay, right? You had most companies beating expectations on average by about 4.4%, but we have to keep in mind that a lot of that came from energy, because obviously energy companies have just been blowing it out of the water in terms of profit. If you X that out, earnings have actually been down, not up. So that's something we have to consider.
And Tom, talking about oil prices, they are up about 1% on the heels of that headline, very much driving a lot of the action that we're seeing today with the declines that we're seeing in equities continuing to deepen as we move ahead in this morning.
Up a stick on Brent crude back to 98. We've ebbed off a little bit in the last 20 minutes, but I would put it in the category, Lisa, it bears watching.
It bears watching, especially because it's a reversal of the trend that we've seen. How much is that what's underpinning the optimism, the decline in gas prices, and this fact that we have seen a cooling off in oil, which is one of the major components for a lot of the headline CPI prints? Right now, let's turn to somebody who's been tracking this all from the wonderful city of Milwaukee, dear and near to my heart. Brent, Judy, CIO of Northwestern Mutual Wealth Management, talking about the potential optimism or not heading into the rest of the year. You think a recession is already baked into the price. What makes you confident about that, given the resilience that we have seen in the valuations?
Well, I mean, there's so many things to say here. I guess if you look at the 25% decline early in the year, I think that was the baking in of a mild recession. Everybody trotted out their graphs that showed that the S&P was pricing in a 91% chance of recession. I think that's priced in. Look, what's going to happen for the rest of the year is going to be determined by the path of CPI, period. Everybody does these historical analogies. They talk about earnings. I think you need to look at 66 to 82 if you're going to start making historical analogies. And each and every one of those times when CPI peaked, the market bottomed. And guess what? During the time when CPI peaked and the market bottomed, earnings actually peaked and rolled over. Think about the CPI comments that you just made, the PPI comments, the producer prices, the margin pressures. The most important thing you need to think about is CPI, and I do think that's peaked, and I think it moves lower in the coming quarters.
Brent, as you know, and you've been very good at avoiding the cliches, the mother of all cliches right now is to buy quality. We're in search of what that means. I have no clue. But what I do know is if I have a 3-year hold, a more cautious Northwestern Mutual view, I can parse quality growth versus quality value. Which is more attractive now, given a short term of 3 years?
Quality value for sure. I mean, if you look at value as a factor, it is as cheap as it's been historically.
Agreed.
And so if you think about value, I think about things like the S&P 600, which surprisingly to some is small caps, but it's quality small caps.
Right.
That has actually been the best part of the market this year. Not large caps, not mid caps, it's quality small caps and towards the value side.
Okay, but I need to interrupt. This is so important, Brent. Since 2014, we've had a partition where growth has reigned supreme. What is the catalyst for quality value to begin to catch up?
I just think the differences in valuation. Look, valuation is not a shorter term metric, but it's a longer term metric that tends to work. If you buy something cheap, you're paid over periods of time, 3, 5, and 10 years. You had an extremely odd market during the period of 2010 to 2020, where interest rates were artificially low. Earnings on the technology side were the only game in town. I think that's shifted. You just mentioned earnings in your opening with oil stocks and things of that nature doing a bit better. And think about the possibility for interest rates to continue to rise on the 10-year. Certainly, I do think the Fed is probably done here in the not too distant future, at least for now. But I don't think we're going back to a period of time where you wake up each morning and worry about deflation. I think it's quite the opposite for the next few years. And every economic cycle has had different leadership because it's unique. And so I think going forward, you should look towards quality value, just given the cheapness. And if you think about it, the economic environment will eventually shift. I think we're going to have a mild recession. There's another side to that, and we already have priced that in, I believe. And so when you think about valuation plus what's coming, I think from an economic perspective, I think you want to stay in in value.
All right, well, it takes two views to make a market. And Brent, you're kind of running contrary to what we heard from some of our prior guests, like Anna Hahn at Wells Fargo, talking about how growth is going to be a winner either way. Let's talk about whether or not you're finding value in the bond market. You just said, in theory, yields are going higher. Does that mean you don't want to be a buyer of treasuries right around 280 at the moment?
From the standpoint of what my clients need to hear, I want them to own fixed income because it serves a purpose in their portfolio, and it guards them against all the different kind of outcomes that could be adverse to what is actually our base case. And so they need to own those for their near-term liabilities. But from an outright perspective, I do think 10-year treasuries will find their way higher. I think people are going to demand a little bit more risk premium against inflation, against the unknown, to the upside. And so I think the term premium, which has been highly negative for the past 3 or 4 or 5 years, I think that has to move higher. And that means a 10-year treasury that I think goes back towards 3.5% to 4% over the coming year or two. Now, that's not a reason not to own bonds, but certainly I do find more value in equities at this point, especially those that are very cheap.
One thing that has been a theme through all of the guests that we speak to is a humility in the face of all of the uncertainty and a desire to be nimble. If things shift, if there is some sort of exogenous effect, or if there is some development that goes against their assumptions, how do you stay nimble? How important is that to you?
Yeah, I mean, certainly we want to stay nimble. We have an outlook. I don't think the opportunity for me is to try to outtrade traders. I think a lot of those people get on the show and talk about that. I manage individual investors, and I think they should focus more on the long term and have that as their anchor. But certainly we make shifts within the shorter term, and we do things like hedge. I talk about equities moving higher. We've owned commodities for the past couple of years. We owned tips. And so things like that are things that we do on the opposite side of the equation. So all of our oars are on one side of the boat in case an unexpected wave hits. And so I think that's important for any listener that is an individual investor to think more about how you have these different exposures more longer term, and then you can make shifts and changes around that longer term objective.
Brent, thank you so much. Greatly appreciate it. Brent Judy, Northwestern Mutual Wealth Management with us today. Futures negative 15, they divert. Dow futures negative 47, and the VIX out with a 22 print, 22.08. Lisa, Ira Jersey just publishes at Bloomberg Intelligence with a whole set of ideas on curve inversion. And to me, the word I use here is stochastic, Lisa. They go down, they invert, they're ugly, and they flip back. And Ira seconds that by suggesting that inversions don't last all that long.
How do they flip back, though? That perhaps is the more interesting aspect of this. Is it that people expect the Fed to cut rates or to hold off on some of the rate hikes, and that leads the longer end higher? Or is it the other way around, that people take a look and they say, okay, well, you can see that this is sort of steadying out in the short term. Long term, we might have more inflation than people are currently
Negative
assuming.
46 basis points on the 210. Lisa, I still can't get used to the idea I'm even saying that. A 0.46 percentage point difference. You get paid more with a 2-year yield than a 10-year yield?
This is a historic moment, and we can't say that enough. And when we start giving sizes and scopes like the biggest inversion going back to the year 2000, we are dealing with a shocked economy that is dealing with near-term inflation. And the belief is that it's going to go back to 2%. And so that is what you're seeing represented in this yield curve. Whether the path to get there is pernicious and violent is something up for debate.
Quickly, Kayla, you wonder whether it will move tomorrow. I mean, does an inflation report move inversion?
I'm sure it will move the bond market as a whole, Tom. Yes. The question is, if you get a hot inflation print, do you actually see yields going up because it means a more aggressive Fed, or is the expectation a more aggressive Fed leads to bigger concern about growth, and then we see the bid into the Treasury market? It'll be interesting to see how it shakes out.
6 basis point move on the 2-year yield, 3.26%. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A stunning development involving former President Trump. Federal agents searched his residence at Mar-a-Lago in Florida as part of an investigation into whether he took classified documents from the White House when he left office. The former president said in a statement that FBI agents broke into his safe. He says he's being targeted to derail a potential run for the White House in 2024. The U.S. has announced another aid package for Ukraine. There will be $4.5 billion in additional direct aid and $1 billion more in military aid drawn from existing Pentagon inventory. The military package includes artillery, ammunition, anti-tank weapons, and medical vehicles and supplies. Taiwan's accusing China of using the visit of House Speaker Nancy Pelosi as a pretext to hold war games in the region. Foreign Minister Joseph Wu says Taiwan is concerned that China will invade. He called the Chinese military maneuvers a violation of international law. Meanwhile, Taiwan responded to the Chinese drills by holding its own live fire exercises. They took place on Taiwan's southeastern coast. And semiconductor giant Micron Technology plans to invest $40 billion through the end of the decade to build memory manufacturing in the U.S. The company says the investment will create up to 40,000 jobs. Micron will join the list of those seeking government subsidies from a new law that President Biden will sign today. Another sign that higher mortgage costs are cooling down the U.S. housing market. Last month, the supply of homes for sale across the U.S. grew at a record rate, according to Realtor.com. The number of active listings nationwide jumped 31% from a year ago. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The conventional wisdom that the Democrats will lose the House is probably right if you look at history, right? Democrats face an uphill battle, but the margins there do count. I think our view is that they could lose maybe as little, as few as 10 seats or as many as 50 seats.
Libby Cantrell, really quite good yesterday with PIMCO. It was too short a conversation ahead of their public policy study. And of course, all of it in Washington, affirm it now to the election the first Tuesday of this November. We actually had our first meeting yesterday on our coverage of that. Really looking forward to Bloomberg Surveillance giving you the messaging of that election the morning after. It is the morning after a raid by the Federal Bureau of Investigation under search warrant. So not a raid, but a search of a former president's private residence. It is unprecedented. Greg Valliere, on short notice, joins us this morning. We're honored that the gentleman from AGF could join us. Greg, you and I remember in our youth Watergate. This isn't Watergate, isn't it?
No, it's not. There are a lot of differences. And one is that, of course, Nixon resisted all of this. And I would argue, Tom, that last night was a trifecta for Trump, 3 victories in one evening. Number one, he's on the front page of every newspaper in America. He loves that. Number 2, he gets to play martyr. He's brilliant at playing martyr. And number 3, the Republicans are looking pretty unified. And if you look at the quotes from everyone from Kevin McCarthy to obscure House members, they're all outraged that this happened. So for Trump, I think it's a victory.
If Democrats, independents, and Republicans assume that the Attorney General will in some point voice or act or begin a judicial process, does that get in the way of our electoral process this November or a November 30 months from now?
It may, to the extent that it might affect voting, but I don't think legally it will, because Donald Trump specializes in cases that drag on for 7-8 years. So he'll appeal and appeal and appeal, and I think he still could run. The key, as always, is moderate voters. Will moderates decide they've had enough, like many Republican moderates have decided? That could make a difference, but right now, I think that this is it's a plus for Trump.
How much, Greg, does this change the dynamic heading into the midterm elections? Because we did see some of the polls showing that Democrats have been gaining ground on the heels of lower gas prices and some of these legislative wins.
Yeah, that's really intriguing. I mean, you've got food and gas prices coming down. You've got Biden having a pretty darn good summer. So it's possible that maybe the Democrats' losses will only be 5 or 10 seats in the House. Maybe the Democrats will keep the Senate. But I can't see the House staying Democratic. I think the House will flip.
But, Greg, what does it say in terms of President Biden's second 2 years of his first term, this idea that he will not be able to get that much more legislation through? How do you sort of advise some of your clients in terms of what they can expect in response to a downturn, what they can expect in terms of debt reduction, and some of these other issues that have been increasing talking points?
It's going to be a pretty meek agenda in the last 2 years. There's not much left that they can get done. So for my clients in the financial world, that's a good story. Gridlock is a good story. They don't have much to worry about. I don't see any new taxes coming for a long, long time. I don't see any big new spending coming for a long time. The big crisis, I would argue, is geopolitical. There's a lot to worry about there.
Yeah. Well, on that point, Greg, this is a United States of America, where we're talking about the home of a former president being searched for documentation he may or may not have taken from the White House, at the same time that we're expecting in a couple weeks hearings to resume on insurrection at the U.S. Capitol. That, to me, looks like a democracy very much in some form of crisis. How does that play when we're trying to defend democracy in Taiwan?
Yeah, it's a very, very good point. And I think Trump, of course, breaks all of the rules. That's always been the case with him. And I think it will happen again. I would just say that Trump is still alive politically, and I would have guessed a few months ago that he'd be close to finished. He's not finished. You can't underestimate this guy.
And what about the other Republican potential candidates for 2024? Is there realistically anyone who could beat him if he runs again at this point?
Maybe DeSantis. You can't rule him out. I think after Liz Cheney loses next Tuesday, she'll probably go to New Hampshire and see how things look for her as a candidate. There could be a dozen candidates, but if Trump runs, he'll clear the field.
Greg Valliere, I'm going to leave it there. Thank you on short notice for joining us here on this most historic day for a shocked America. Again, a search warrant and a search by the Federal Bureau of Investigation of a former president's residence. This is in Mar-a-Lago, Florida. We'll have much more on this. I know David Weston is putting together a balance of power that will really address this. I believe we see that on TV and radio at 12 noon. Lisa, I want to get back to inflation tomorrow. We can partition it any way we want, but I want to go, we're making a comedy of it, and I have immense respect for the Cleveland Fed and the way they calculate core CPI around 16 parameters, but we're all nowcasting. That's how we've gotten our economics down to we're nowcasting inflation.
What happens, do you think, in markets if that CPI print comes in well above expectations? What if it rises from 9.1%? Where is the balance of risk right now in markets?
It's an important question, and what's important here is, let's say it goes out to 9.4%, whatever. I don't think the markets look at that. I think they go beneath the headline data, and then they'll make their assumption from there, Lisa.
I don't know. I think if it really ticks up or it stays at 9.1%, I think that would be shocker, because we've been talking peak inflation, and there has been a profound questioning of the Fed's framework when it comes to understanding inflation, how much it will roll over. That might change the narrative completely.
Kaylee?
Well, is peak inflation the new inflation is transitory? I mean, realistically, is that where we're at right now? Because if that is the case, what Lisa is describing, that to me is what that looks like.
Yeah,
I think we're going to go to the core analysis, and that may go up as well. I don't mean to push against that idea, but I'd like to think the markets will not look at the headline data. And I would say also critically, Lisa, the headline data in the United Kingdom and continental Europe is more of an important analysis, because of the immense utility pain there. I don't detect that utility pain in America.
I would agree with that. That has been the huge driver of some of these shocking numbers that we've seen out of the likes of Germany, which has been anti-inflation for so many years. I do think that the other interesting factor of the CPI report is what happens if it comes in at consensus, 8.7%? How much does it have to go down for it to surprise the market the other way and pave the way for that Fed pivot so many people were confident in a couple weeks ago?
I'm not going to mince words. You're going to want to stay with us. An important conversation with Neil Dutta, head of U.S. Economic Research, Renaissance Macro Research here. With futures, they're in a churn now, set a little lower off the Russian pipeline news. Futures at -10. Stay with us. This is Bloomberg. Bloomberg Surveillance, we welcome all of you. John Farrow's off. Kaylee Lyons in for John. Lisa Abramowicz and Tom Keene. We're thrilled you're with us today. Staggering towards an 8:30 number tomorrow. Productivity coming up, and we'll look at that data as well. Futures at -12, Dow futures -22. We'll see what we see with a curve inversion of 46 basis points, Lisa. That's really quite something.
Yeah.
We've got numbers. Here's Michael McKee.
Guys, unfortunately, they are not good numbers for the economy. It isn't going to change the way the Fed thinks about things, but non-farm productivity fell 4.6% in the second quarter. Of course, what you're taking is an index of output divided by hours worked, and you end up with the 4.6% decline. The number in the first quarter, the final number in the first quarter, down 7.4%. That was the biggest decline since 1947. This is the biggest 1 year over 1 year decline since the series began, they say, 1948. Unit labor costs up 10.8%. That's not going to surprise a lot of people who are doing hiring. And in the final months of the first 3 months, rather, of 2022, they were up 12.7%. So a little bit of a decline, but it's still faster than was anticipated. That non-farm productivity number does match what was anticipated. Small business optimism was out earlier this morning. Just wanted to throw that into the conversation because after many, many months of declining, it actually went up a little bit, 89.9 from 89.5. We just recently did a story that highlighted those who think that the U.S. economy is going into recession. Bill Dunkelberg, who runs the survey for the Nfib, was one of the few people who thinks that things are terrible, but his group with a little more optimism out there this month.
Very quickly, Michael, to pivot to tomorrow, what is the tone right now? now? A lesser inflation or a greater inflation than survey?
I think there seems to be a bit of a lean towards a greater inflation, but I'm not sure if that's not a monster under the bed fear. The Cleveland Fed, you were talking about that. Their nowcast has people a little bit scared. But we have seen gasoline and oil prices go down, energy prices go down. The question is whether food and some of the other prices that have worked their way into the CPI.
Michael McKee, thank you so much. An incredibly important day tomorrow for Chairman Powell and for all of us as we look at a report on this inflation affecting all. Right now, and hugely anticipated, Neil Dutta joins us. He's head of U.S. economic research at Renaissance Macro Research. But what's important there is he writes with a stiletto knife in his hand, slicing and dicing the zeitgeist that is out there. Neil Dutta joins us on our American economy. I love the way you go after consensus. What's consensus get most wrong right now?
Well, I think the consensus right now is pivoting it feels like very quickly to peak inflation, slower inflation, maybe the Fed backing off. I think that's probably a mistake.
You think that that's a mistake, Neil, because you think that the Fed is going to keep going and that inflation hasn't yet peaked?
Well, I don't think core inflation has peaked, Lisa. There she is, Tom, my arch nemesis, now my best friend. We're on the same side of side of the fence. Yeah, look, I mean, at the end of the day, I think things changed at the June FOMC meeting. The Fed basically told us that it was willing to, push the economy into recession to achieve its goals. And, we went from it's going to be challenging to achieve a soft landing to now it's going to be very challenging to achieve a soft landing. I mean, the path is narrowing. I mean, they sort of use these kinds of, words to basically demonstrate how difficult the task is going to be. But, look, I mean, the last employment report was a knockout. And, essentially, we have inflation significantly above target. You heard Mike McKee there talking about unit labor costs. I mean, unit labor costs are up a lot. Interestingly enough, during the pandemic, prices have actually been trailing unit labor costs, which in my view means that there's more upside to prices going forward. And despite the fact that price inflation is so elevated, financial conditions, what have they been doing over the last couple of weeks? Well, they've been easing. So to me, that suggests that the Fed has a lot more room to go. I think the die is cast now for a 75 basis point move at the September FOMC meeting, and they need to leave it on the table for the remaining two meetings this year.
What does that mean for equities? I know that you've been a big bull in terms of the corporate resilience and their ability to adapt and adjust, to use Tom's phrase. Why is this time different, this moment different when it comes to that?
Well, I mean, equity markets, when you think about it fundamentally, it's really driven by three factors, right, Lisa? It's interest rates, actual and expected earnings, and the risk premium, right? So the move in July, the 9% burst in the S&P 500 last month, that was entirely driven by lower interest rates. So if I think the Fed's going to keep hiking, I think interest rates will go up. And, the economy is not out of the woods. I mean, we're going to see residential investment contract in the third quarter. We're going to see capital spending come down because growth expectations have softened. Inventories will likely be more negative, particularly for, sort of durable goods industries. So you'll see an inventory liquidation of some kind, I'm assuming. That's all negative for GDP growth, which is negative for growth and earnings. And so, if interest rates are going up and earnings estimates are coming down, it's hard to be optimistic about the equity market. And of course, the equity market is one way the Fed has to slow the economy down.
Yeah, on the subject of earnings, Neil, obviously the ability to retain profit margin in an inflationary environment like this one is predicated on the ability to pass on higher input costs to the consumer and consumers to tolerate those higher prices. Are we overestimating the resilience of the U.S. consumer?
Consumers have an enormous ability to take on higher prices, as evidenced by the fact that, look at how much excess savings they have. The entire improvement in consumer spending in the first half of the year was driven by lower savings rates.
But that can't last forever, right?
Bingo.
So where does that leave us, Neil?
To me, it just leaves me more cautious on the economic outlook. I'd be cautious on stocks. I get that the equity markets have kind of ripped here. Maybe a lot of the people that were thinking the way I do about things, already sold back in June. But this isn't over yet, that's my view. But I think one of those reasons is because the Fed's not done yet. And you think about the rest of the world, the dollar is likely to. I don't think the dollar strength is over yet. I mean, you have a U.S. economy holding up better than many of its major trading partners. You have the Fed still hiking. That's obviously very dollar bullish.
So the holding up better. If we get a data inflation, if we get whatever the real economy will give us, and it doesn't sound like with productivity it's going to be all that much, that's still a sustained nominal GDP. So let's go to the data optimism. Can we say that data and Bramo agree? I think we can say that, folks. This is a rare occurrence.
Breaking news.
But away from that, when you say to Bramo here in months, you're wrong, it's going to be because data's optimistic. Can corporations adapt to this unique set of cards right now?
Well, they're going to adapt, but Tom, that's going to require some pain for the economy, right? I mean, if you think about the first half of the year, to me, for business economics, the most interesting thing is this reconciliation between the fact that hours worked have been rising very robustly and output has not. So we've seen this big drop in productivity. So the question is, how do companies reestablish stronger productivity? That's going to require some combination of slower hiring, fewer hours worked, raising prices.
For 50 years, it's been total factor productivity to the rescue. Is it going to come to the rescue again? Technology is an overlay?
I mean, it takes time. I mean, I don't see an investment boom out there right now. Okay. So where's the productivity going to come from?
I just want to get on a negative note. So Bramo and Dutta agree to.
Look, I mean, honestly,
pretty well, Lisa.
This is the issue, is that a lot of people are looking at the financial conditions index, and Neil, you mentioned this, and it's actually the least. That it's the least tight. It's the weakest that it's been. It's the loosest that it's been going back to April. And it makes no sense. And this is the bear case. No, but Neil, you alluded to this, and this is where I think we agree, is the Fed's going to look at this and say, I don't think so. And they're going to push back. When do we get that pushback?
Well, it could come as soon as Jackson Hole. It could come at the September FOMC. You've started to see it particularly among a lot of the regional Fed presidents, right? I mean, they've been saying we're not done yet. Look, I mean, the other thing, of course, is that they'll try to be hawkish, but they sound dovish in the process. For example, they'll say something like, well, it's the market's it's too soon to be pricing in cuts. Well, you shouldn't be pricing them in at all. So why are you even giving the market that sort of language? I think what the Fed basically needs to say is that we have a singular focus on bringing inflation down. And we're willing to do what it takes in order to do that. And there are no cuts coming.
I'm depressed. Neil, thank you so much. Neil Dutt of Renaissance Macro. What I'm depressed about, folks, is there's a point like out there somewhere where you sort of like forget about birthdays, like you don't celebrate them. And I mean, Lisa, you're not there. I mean, everything's a three-ring circus when Lisa has a birthday, but
where are we going
Lisa,
with this, Tom?
Lisa, if it's someone's birthday and they're not of a fossil vintage, they actually celebrate their birthday.
Is this your way of saying happy birthday to Kaylee Lyons?
We're saying happy birthday.
I think we're getting there.
We're saying happy birthday today to someone who actually celebrates their birthday in a normal, rational way.
Thank you,
Happy
Tom.
birthday,
There is
Kaylee
nowhere
Lyons.
else I'd rather be on my birthday than here with you and Lisa.
I just chopped up a fur ball. That's all I can say. Tom, it's a quite exceptional moment to be celebrating.
There's a birthday.
A birthday. Well, here we are. And I will say, as I head off to the other property that John Ferro has, we'll be celebrating the birthday, talking about semiconductors and chips. I'm really excited for this. Sanjay Mehrotra, he's the president and chief executive officer of Micron Technology, speaking to us from Washington, D.C., where he is there after announcing a $40 billion investment over the next decade to really try to ramp up production in the U.S.
And what's great about that, Lisa, is coming up, I can call Kaylee Lisa or Lisa Kaylee. This is Bloomberg.
She's really excited.
Morning.
I can testify right now.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who don't want him to run for president. That's after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation into whether he took classified documents from the White House when he left office. The former president was in New York during the search. ETF manager Kathy Wood says the U.S. is already in a recession and the Fed will have to start loosening sometime next year. Wood spoke to Bloomberg TV.
We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same.
Wood says her funds will stay fully invested during the downturn in what she calls innovation. A new working paper from the St. Louis Fed says that ending emergency jobless benefits had a significant impact on boosting employment. That may underscore Republican criticism of a Democratic program. The federal government provided enhanced benefits during the pandemic. It increased eligibility to many of the unemployed who would not otherwise be covered. And Boeing is set to resume deliveries of the 787 Dreamliner as soon as Wednesday. That's almost 2 years after they were disrupted by manufacturing flaws. The FAA says that Boeing has made the necessary changes to ensure the plane meets certification standards. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I'm definitely not in the soft landing camp. I think we pushed too far. I think we're seeing the consumer rollover. I think you're seeing inventories build. So when people realize that we're going to have to pivot, the first reaction, yes, maybe we rally, and I think that's the stage we've been in. But then the reality is going to hit like, whoa, we have to be very careful. What are future earnings going to look like?
On fire yesterday, Peter Cheer, head of macro strategy at Academy Securities, and this is what we see, folks. The news flow driving up to the inflation report tomorrow has been extraordinary. There's not only the opinions this way, that way, the other way, but also all the measurements and all the gauges of it. Well, Kaylee Lyons with us here. John Ferro is offering, and Lisa Abramowicz preparing for an eventful 9 o'clock hour. You really wonder what we're going to see from Washington, and the 9 o'clock hour and driving towards balance of power at 12 noon with all that we've seen in the last 24 hours of presidential and judicial politics. Right now, we touch on a really important study, this done by the founder of Bloomberg News, Matthew Winkler, our former editor-in-chief. And Barry Ritholtz following up on it and saying, Mr. Winkler, you're dead on. Mr. Ritholtz, of course, is a master's in business host and runs a few numbers of doubloons at Ritholtz Wealth Management this morning. Barry, you and Mr. Winkler really go after the certitude of sentiment indicators. I genetically dislike them. I don't trust them. Give us a primer on why sentiment indicators are something we must be wary of.
Well, historically, humans as a species are very bad at not only predicting their own future behavior, but at understanding exactly what they're feeling and why. And you know, probably the best example of this is the Black Friday surveys we get every Thanksgiving telling us what people are going to be spending on holiday shopping. And they're always off by a magnitude. When things are going pretty well, they wildly overestimate it. And when things are going poorly, they wildly underestimate it. People don't know what they're going to be doing, thinking, feeling 3 months from now, and it turns out they really don't know how they feel today. The questions that are asked, how they're phrased, the actual language used has a substantial impact, often skewing the results. It's very hard to do this well. Very few people do.
And talk about how partisanship plays a role in this as well, because if you are a Republican not in favor of a Democratic presidency, does that make you think that the economy realistically is worse inherently?
Well, that was Matt Winkler's point. We've talked about on the show repeatedly why you should never let your politics influence you're investing. Politics is emotional. Investing needs to be somewhat rational and probabilistic, and never the two shall meet. But it turns out that lots of folks change their view of the economy depending on whether or not their guy is in the White House. Once their candidate loses, they immediately drop. By the way, this isn't specific to Democrats or Republicans. Both parties seem to do it, but as Matt Winkler showed in his piece yesterday, it's a little more intense on the right than it is on the left, but you could probably say that about a lot of things.
Okay, so Barry, obviously sentiment is pretty dire. When you take a look at the data we have gotten out, like the payrolls report on Friday, do you see an economy in dire straits? Do you see economy in recession?
No, well, so we see an economy that's going through a growth recession, meaning the rate of growth is slowing down. But you don't have consumer spending at these levels. You don't have hiring at these levels. You don't have wage gains at these levels in a recession. That's not to say a recession isn't out there somewhere, whether it's next year or next quarter. We really don't know. But generally speaking, this is a pretty robust recovery and economy. And when we look at the two negative prints of GDP, you know, they're very technical reasons for that. Some of it is trade, some of it is inventory buildup. A lot of it is in real terms, meaning that inflation adjusted, it looks like we're contracting, but in nominal terms, we're expanding dramatically. Look, in the piece I wrote up this morning, riffing on what Winkler wrote, I said, let's get into the specific University of Michigan sentiment index going back to 1978. And you have to ask the question, is this economy worse than the 1980-82 double dip recession, the 9/11 terrorist attacks, the dot-com implosion, the great financial crisis?
Or
this is like, this is silly compared to those years.
Barry, and we got to move on to another topic here. We got history being made right now. But Barry, to your wonderful point, is it the same economy as those other important dates? Barry, 210 spread is just broken down. We are almost buttressed up where we were in 1982 and in 2000. We are seeing an inversion and, frankly, a pretty normal plunging to a greater yield of the twos versus the tens. What does curve inversion signal to investors? Is it something they should worry about or just monitor?
So both. You have to pay attention to it. What you want to look at when the curve inverts, because not every inversion automatically means a recession, is you want to look at the two Ds, depth and duration. Is the curve inverting deeply, and is it staying inverted for a long period of time? The one counter to that is, hey, when you're starting from zero and the Fed is raising rates rapidly, you can't help but invert the curve. It's just the nature of going from 0 to 2.25 in 6 months. The Fed is the driver of the curve inversion. That said, this is one of those things that has a 97% track record. There have been a couple of short, shallow inversions that did not lead to a recession. But when the 210 yield curve inverts, you should, even with all what the Fed's doing, all the hair on this, you should pay attention to it. It means that the odds of a recession over the next 12 months is increasing.
Okay. We got to leave it there. Barry, thank you so much. Greatly appreciate it, particularly there on investor sentiment. I'm so glad, Kaylee, we did that with Mr. Ritholtz, because I'm just genetically not a giant fan of these indices. Sometimes confidence indexes will get my attention, but as a general rule, I'm just like, there's just so much noise.
Okay.
I mean, no one's ever called me and said, what's my sentiment right now?
That's fair, but when Jerome Powell directly references consumer sentiment,
who gets
Michigan
called?
Sentiment, I don't get called. No one calls me. People text me, Tom.
They text for surveys.
No, I don't get called for surveys or texted for surveys.
I don't either.
But
I just don't get it.
But okay, so maybe you won't be paying as much attention to the UMich consumer sentiment data that we get on Friday, but we will all be paying attention to the CPI data tomorrow. At this time tomorrow, we'll be 25 minutes post CPI. What conversation we'll be having is going to be really interesting, depending on if the print is hot or cold and what the resulting reaction is in a bond market that has been absolutely confounding for the better part of 2 months now, Tom.
There it is, 47 basis points. We just dipped down. I'm going to say this again. The call of the summer was Priya Misra at TD Securities, and that velocity to negative 40 basis points, and she even alluded at one point to negative 50. I can't believe I'm saying that. We're almost there. There will be an extraordinary Bloomberg surveillance tomorrow wrapped around an extraordinary inflation that affects all of this nation. These are unusual times, and I hate to tease forward to it. Will we see double-digit inflation? This is Bloomberg.